Good day, everybody. We're going to get started here with the live stream momentarily. Just going to give it about 30 seconds or so, getting a few things loaded up here, and then we'll get started. I see we have a ton of people already on the live stream. We've been conversing, giving some updates. They had a big beat in terms of revenue, but the EPS had a big miss. There was no impairments that I'm seeing, but we'll take a deeper dive into it here in just a second. Going to have a snap of water, and then we'll get started here. All right, welcome back on the Pursuit of Wealth, everybody. It's Rod here. It is Tuesday, July 28th, and it's earnings season day for Tilray. We also had SNDL come out with earnings this morning. It was really bad. They missed in terms of analyst estimates, EPS, and revenue, and they said it was due to some challenges with their liquor and retail segment. But Tilray had a huge beat in terms of revenue, absolutely crushed it, and they didn't have any of the World Cup sales. This is for the quarter ending in May, so the World Cup wouldn't have started yet. So the next quarter, fiscal Q1 of 2027, which will be the next quarter, the next time they report, we'll see World Cup sales on there. So that's promising for revenue, but they had a huge miss in terms of EPS. Came in at negative 43 versus negative 0.43, sorry, versus negative 0.012, I believe. But anyway, we'll go through the numbers here and we'll review the earnings, and then we got the conference call kicking off here in about 12 or 13 minutes. So we'll jump right into it, and then we'll do the call as well. We'll hang out for a bit, and we'll go through some of the stuff here. But before we do, make sure to smash the like. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos. As always, not financial advice. This is for entertainment purposes only. I do own Tilray in my portfolio as well, full transparency. And you can follow us over on Rumble. You got to follow us over here, folks. I've been getting banned on a bunch of other platforms, left, right, and center. I see content creators all the time saying they were banned for no reason, and it takes them weeks or months to get their account back, or even like to be told what happened. And most of the time, they don't even get it back at all. So it's best to maintain multiple forms of communication. Follow us over there as well, just in case we ever get shut off here on YouTube. I've seen people with barely any infractions get banned from this platform. So here we go. Tilray Brands delivers record fiscal 2026 revenue, and oh boy, was it ever, and adjusted EBITDA, demonstrating the strength of its diversified global platform across MJ, beverage, hospitality, and wellness. So record fiscal year net revenue of $915 million, record gross profit, consistent adjusted gross margin. I think it was at 38% for beverage, but we'll check it out here in just a second. Record adjusted EBITDA highlights the strength of Tilray's scaled business and portfolio growth strategy. International medical MJ revenue increased 34% for the fiscal year, reinforcing Tilray's leadership across Europe and expanding patient access at scale. And I think Organigram said they had like a 10% market share in Germany, but I think Tilray was the biggest one. BrewDog acquisition ignited the global expansion of Tilray's beverage platform, unlocking new growth through the power of brands, hospitality, and consumer experiences. Disciplined capital allocation strengthens balance sheet with approximately $235 million in cash, restricted cash and marketable securities. Net debt reduced to $0.7 million. Fiscal year 2027 guidance, which essentially means they basically have no debt. Fiscal year 2027 guidance of adjusted EBITDA of $68 million to $75 million, reflecting double-digit growth driven by continued momentum. So again, this is for the period ended May 31st, 2026. This would not have the World Cup sales on there, but obviously that will be a huge impact as well. And then just the summertime rate, US dollars unless otherwise stated as well, these figures. So get some commentary here from CEO. We expect over $1 billion in annual revenue in 2027. I hope so, because you came in this year with 915. Not too hard to do that, hopefully. But yeah, we'll go through here. Everybody can read. I'm sure you're capable of doing that, but we'll go through some of the highlights here. Let me just see. I honestly, I've only skimmed over it. There wasn't any impairments, but huge miss on EPS and loss. So we'll see if we can find out why. Let me me just see here. So yeah, they go. Keep in mind this was fiscal year end as well, so it's full financial highlights for 2026, and then they go over the fourth quarter. So gross margin was 28% for fiscal 2026 compared to 29%, so that did drop. What else do we got here? MJ net revenue increased 8%. Beverage net revenue increased 6%. Distribution increased 21%. Wellness increased 9%. So, yeah, here it is here. Driven predominantly by non-cash charges, net loss was $105.2 million in fiscal 2026, and a net loss of per share was 109. So big loss there. Adjusted net income increased almost 90% to $12.2 million compared to adjusted net income of $6.5 million. Adjusted net income per share, or adjusted EPS, was 0.11 compared to 0.07. So record adjusted EBITDA. So $61.1 million in fiscal 2026 compared to $55 million. Fuel surcharges for the fourth quarter. So net revenue for the fourth quarter was $281.7 million, and we were expecting $246. So $281, huge beat compared to $246. And then this quarter, compared to the fourth quarter last year, would have been $224.5 million. So big jump up from there as well. Gross profit increased 34%. MJ net revenue for the quarter, 5% increase. Beverage for the quarter was $105.6 million. Gross margin was 38%. Yeah, that's what I remember reading. Distribution net revenue increased 15% for the quarter sequentially. Wellness net revenue increased 16% sequentially. And the loss was $37.9 million. I mean, it's a lot better than in the billions, but yeah, driven predominantly by non-cash charges. So net loss was $37.9 million in the fourth quarter, and a net loss per share was 43. So as I mentioned, so we were expecting negative 0.012. So we were expecting a loss, but negative 0.43 is a huge miss. So unfortunately, we had a huge beat in terms of revenue, which was awesome. We didn't have the World Cup on there. But unfortunately, EPS was a huge miss as well, so we're probably going to be pretty muted, I would think, going into tomorrow. And exactly as I had predicted, we were up about 2% there. We're now up 1.24%. So the fact that we had a big beat on revenue is being offset by the EPS miss. Huge miss. Huge beat revenue, huge miss EPS, earnings per share. U.S. rescheduling update. Following a recent U.S. rescheduling developments, Tilray continues to evaluate multiple pathways to participation in emerging federally compliant, science-driven medical MJ market. Rescheduling represents an important federal policy milestone that may support expanded clinical research, greater product standardization, clearer quality and safety expectations, and the gradual development of the regulated MJ market framework, medical MJ market framework in the United States. Meaningful regulatory uncertainty remains with ongoing legal challenges. Tilray is approaching the opportunity with discipline, regulatory rigor, and a medical-first strategy. Tilray has already developed a blueprint for U.S. Tilray medical platform that is focused on research, education, cannabinoid-based medicine development, patients, and compliant medical MJ access rather than adult use retail. The strategy is designed to leverage Tilray's medical global foundation, including operations across more than 20 countries, pharmaceutical-grade cultivation, manufacturing capabilities, and quality management systems, complex regulatory expertise, clinical research experience, physician and pharmacy relationships, and patient access infrastructure. And we know that they recently acquired HelloMD as well, which will be direct to patient access here in Canada. This foundation is supported by Tilray's broader international medical MJ platform, which has served hundreds of thousands of patients globally and includes more than 200 medical MJ products across all of our markets. So we already went over some of the guidance there. So we'll scroll down. So cash and cash equivalents, 225 plus you add everything up, but then you get, like I said, 235 million. Which is not that different. But check this out. So Goodwill here. So Goodwill, they still have... No, that's intangible. I didn't think it was that low. So they still have... I thought it was 750. Yeah, 752. So they still have Goodwill of 752 million on the books. So $750 million. They didn't realize any of those impairments and write-offs this report. So we're still going to have 752 million goodwill on the books. So it could still come in 2027. But I'm still expecting more dilution. We know they have an ATM of 180 million, which they said they would tap into only for creative acquisitions, M&A, etc., and strategic investments. They said that they might use it to acquire an MSO or partner with somebody in the U.S. So it's not gonna be just for keeping the lights on, but I'm not saying dilution is okay or it shouldn't have been done. And I would much rather them do hard work than just fail. And it's not that they're not working hard. It's just look at all these other operators. Some of these other operators, just blood, sweat, and tears. And the CEO is in the operations. They're in the grow rooms and everything like that. I would argue that ours doesn't even know what a joint is. So at the end of the day, it's going to be tough because we don't really have a management team that's just blood, sweat, and tears like some of these other companies, right? When the going gets tough, they just dilute. So why work harder and smarter when you can just dilute, right? They'll sit back and collect their millions of dollars in their compensation, and if the going gets tough, oh no worries, we don't need to work harder. We'll just dilute and screw everybody else over, right? So it's frustrating, but I do think that there's going to be a little bit more dilution. There's probably going to be some acquisitions, maybe a partnership with an MSO, or they buy something, or partner with one, or a pharmaceutical company. We'll have to wait and see. We saw that pharma companies getting into the psilocybin space. But yeah, I do think that we're going to see some more dilution in 2027. But that could be the end of it. 2027, 2028, we know we just turned EPS positive there a couple quarters ago. So we're starting to turn a profit. But again, it's going to be a little bit yet. And we still got a lot of expanding to do in the US. So I just prepare for more dilution. But it's probably coming toward the tail end of it. I would say another year or two max. And it should be a thing of the past. Hopefully, the same goes for the CEO. Long-term investments. So here it is here. So if we scroll down, you can see here impairments of intangible assets and goodwill, 0. So nil for this year. You can see last year was almost 1.4 billion. So we still got about 752 million to write down. So we'll see how these impairments go, but it could come in sometime in the next year. Liquidation costs and net of recoveries. So 1.4 million. We know that they had a lawsuit ongoing with the MedMen thing. I think they were seeking like 2 billion. They'll be lucky to get 50 million if they get any of that at all. But yeah, they're not going to get 2 billion. They'll maybe get 30 or 50 million. But yeah, Tilray said they would fight it rigorously and endlessly. But as you can see here, loss for the quarter, negative 0.43. And then I'm going to have to, if we have some time at the end, we'll go over it again. But that's pretty much all I wanted to go over. Let me just see here. So yeah, the loss was GAAP losses driven mostly by operating costs, non-cash items, interest, taxes, not impairments, as I said. But it could have been a lot worse if they did. And that's probably why they didn't do any impairments here, is because they were already negative 4.3 and would have been really bad otherwise. So likely just kicking the can down the road a little bit. So we went over the cash. Where's the excise tax? Is it on here? Less excise taxes. So 20 million? Yeah, revenue from Canadian adult use, 57 million. And then excise tax, 19 million and change. Yeah, we're almost time to go live here with the conference call, so it's starting in less than a minute, assuming they're on time. But here's all the margin here. So adjusted gross margin 40. This is for the 3 months ended. So it gives the net revenue per segment. 281, so 33 was the gross margin, adjusted gross margin for the entire total of all segments. That definitely needs to come up. So yeah, big issue, big reason why we were in a loss as well, because the margin was lower. Doesn't show what it was. Oh, here it is here. 2025. Yeah, it was 30%. It's up slightly from 2025, just by a couple points. But all right, let's take a pause for a second. We'll see if they started. Okay, still hold music, so it hasn't started yet. We'll get that fired up though. And I don't want to play the music because it'll give me a copyright strike more than likely. But let's go through here, see if there's anything else. I think that's pretty much it. If I think of anything, I'll review it while the conference call is going on as well. If they say stuff, I'll also get caught up in the chat. Been neglecting it since I started speaking, but yeah, we'll take a look at that here in just a second. Also, a reminder, tomorrow is the FOMC meeting, so rate decision time tomorrow afternoon at 2 p.m. Eastern time, so we could see some volatility from that. Just one moment here. Okay, still got hold music on. And then, yeah, Edgar wasn't open. Sorry, it wasn't updated, but it's updated there now. You can see earnings release. Yeah, sitting at 410, 412. So we're up 2.25%. But keep in mind, we still have the daily bear flag. So we hit the daily bear flag target that I mentioned at 386. We actually hit 380. But keep in mind, this yellow line is still a weekly bear flag. We haven't hit that target yet. That target's 350. So we'll see how much volatility we get from... Citadel said the FOMC Fed might raise rates tomorrow. I don't think they're going to. I think they're going to pause it. But we could see a bit of a sell-off leading into it with some of that FUD, right? Fear, uncertainty, and doubt. I think they'll pause it, but we have to brace for volatility, and not a great time. Seems like it's always like that when they report earnings. But yeah, we could, from the recent low here, we could still see about another 8% of downside to that 350 target, which is also the all-time low. Just 1 second here. All right, still violining in the background, so we'll get started here. I'll just get caught up in the chat. 114 viewers. Thanks for joining us, everybody. So we'll get started here just on hold music. I'm going to go silent here until it gets started. And once it gets started, I'll enable the audio and we'll do a quick sound check. All right, still violin playing in the background there, so just give it another couple of minutes.
Thank you for joining today's conference call to discuss Tilray Brands' financial results for the fourth quarter and fiscal year 2026, ended May 31st, 2026. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session for analysts conducted via audio. I will now turn the call over to Ms. Baron Narada, Tilray Brands' Chief Communications and Corporate Affairs Officer. Thank you. You may now begin.
Thank you, operator, and good afternoon, everyone. By now, you should have access to the earnings press release, which is available on the investors section of Tilray Brands' website at tilray.com and has been filed with the SEC and OSC. Please note that during today's call, we will be referring to various non-GAAP financial measures that can provide useful information for investors. However, the presentation of this information is not intended to be considered in isolation or as a substitute for the financial information presented in accordance with GAAP. The earnings press release contains a reconciliation of each non-GAAP financial measure to the most comparable measure prepared in accordance with GAAP. In addition, we will be making numerous forward-looking statements during our remarks and in response to your questions. These statements are based on our current expectations and beliefs and involve known and unknown risks and uncertainties which may prove to be incorrect. Actual results could differ materially from those described in those forward-looking statements. The text in our earnings press release includes many of the risks and uncertainties associated with such forward-looking statements. Today, we will be hearing from key members of our senior leadership team, beginning with Irwin Simon, Chairman and Chief Executive Officer, who will provide opening remarks and commentary. followed by Carl Merton, Chief Financial Officer, who will review our financial results for the fourth quarter and fiscal year 2026. And now I'd like to turn the call over to Tilray Brands Chairman and CEO, Irwin Simon.
Thank you, Baron, and good afternoon, everyone, and thank you for joining us today. Fiscal 2026 proves something important and exciting. Tilray Brands is more than the company many people think it is. Today, Tilray is a diversified global consumer products and pharmaceutical distribution company with leadership positions across cannabis, beverage, hospitality, and wellness. We are no longer defined by one category, one market, or one regulatory outcome. We have transformed Tilray into a company with multiple cash-generating businesses, positive cash flow from operations, excluding working capital, and significant runway for future growth. There is no other company with the scale, diversification, global infrastructure, or interconnected business segments across cannabis, beverage, hospitality, and wellness that Tilray has built brand by brand. Since I took the helm in 2019, when Aphria was singularly focused a $50 million revenue company, we have pursued disciplined acquisition with the scale and thoughtfully invested in assets, infrastructures, and capabilities that define Tilray today. And we've done it with financial discipline. We ended fiscal 2026 with approximately $235 million in cash and marketable securities. Net debt essentially at break even and nearly $700 million of operating assets. Those aren't just numbers on a balance sheet. They represent real brands, real facilities, real infrastructure, real operating capabilities that are generating cash today and creating long-term value for shareholders. The result is a scaled global operating platforms with leadership positions across multiple high-growth consumer categories. Tilray Brands is the largest cannabis cultivator with over 6 million square feet of cultivation capacity around the world. The revenue leader in Canadian cannabis, a leading medical cannabis company across Europe with the largest share of the German medical cannabis oil market, a top 100 global beverage company, the #1 craft supplier and 4th largest beer supplier at grocery in the UK, and the 4th largest craft brewer in the United States, and a global leader in hemp foods and wellness. Tilray Brands now spans in more than 20 countries with more than 40 brands, supported by 22 production facilities, 37 pubs, 16 franchise pubs, and 3 hotels, with approximately 93% of our products are made in-house across our vertically integrated operation facilities. The market doesn't value companies like SpaceX, Amazon, or Tesla solely on what they've earned in a single quarter. It recognizes the long-term value of the infrastructure, the capabilities, and platforms they've built and how they changed the world. We have built Tilray, and that same long-term mindset, investing in business and brands that generate returns in cash today while creating a much larger platform and strengthening our competitive position for the future. What makes Tilray different is not simply the breadth of what we own, but the way our businesses work together. Cannabis, beverage, hospitality, and wellness each create distinct opportunities, but together they give us consumer reach, brand building power, operating leverage, and multiple pathways to growth that a few companies can replicate today. That interconnected model gives us flexibility that single category companies do not have. We can allocate capital where we see the strongest return, bring brands into new channels, use our hospitality footprint to create direct consumer engagement, and adapt as markets evolve. That is how we intend to keep building sustainable long-term shareholder value across categories, geographies, and consumer occasions. We continue to believe that medical cannabis is the future of medicine and remains one of the world's most compelling long-term opportunities, and Tilray is uniquely positioned to lead its future. As medical cannabis becomes increasingly integrated into patient care, we have the genetics, cultivation expertise, pharmaceutical manufacturing capabilities, clinical relationships, bodies of research and evidence, and international infrastructure to meet patients' needs and scale with demand. We also see a future where emerging therapeutic areas, including peptides, psilocybins for mental health, become part of the broader conversation around next-generation patient care. In the U.S. cannabis markets, we continue to see encouraging regulatory momentum, including federal cannabis rescheduling. But our long-term growth strategy has never depended on a single regulatory event or one country. As a global leader in medical cannabis today, when the U.S. medical cannabis regulatory framework is in place, Tilray Medical is established and ready with the playbook, capabilities, and optionality to meaningfully expand our medical cannabis platform across the U.S. when the opportunity opens. Tilray opportunity is global. We're already building leaderships in marketplaces outside the U.S., where medical cannabis, pharmaceutical distribution, consumer health, and wellness are expanding the fastest. Beer is the most consumed beverage alcohol in the world, making it one of the most resilient and enduring customer categories. AI is not replacing beer. Our acquisition of BrewDog added a globally recognized brand, a scaled hospitality platform, and significant international growth potential. We had looked at acquiring BrewDog at different valuations over time and ultimately acquired the business strategically out of administration at an incredible price. Today, we believe we have a jewel in our business that has accelerated our global beverage expansion, together creating an approximately $500 million beverage platform and accelerating the growth of our brands globally. Together with cannabis, beverages, and wellness portfolios, Tilray's diversified consumer product strategy is positioned to capitalize on evolving consumer preferences while expanding profitability, strengthening cash flow, and creating long-term shareholder value. Our strategy is working. Our financial results prove it. Fiscal 2026 was a milestone year for Tilray. We delivered record revenue of over $915 million on an annualized pro forma basis. Tilray is now approximately a $1.2 billion global revenue company. We also achieved record adjusted EBITDA of $61.1 million or $63.4 million, excluding the temporary impact of fuel surcharges. These results demonstrated the underlying strength and the accelerating momentum of our global businesses. At the same time, we continue investing in the future of our business through our acquisition of BrewDog. Since acquiring BrewDog for approximately $54 million, we have further invested nearly $50 million of additional working capital to support the business. Importantly, we made these investments from a position of strength. Even as we invest in BrewDog and the future of our business, we ended the fiscal year with approximately $235 million in cash and marketable securities and a significantly strengthened balance sheet. Positive cash flow from operations, excluding working capital, improved to approximately $18 million, an increase of over $50 million year over year. We reduced our debt by approximately $60 million as of this filing, lowering our net debt to less than $1 million at year-end, a 95% improvement year over year. We've increased gross profit by 8% to $260 million and grew our adjusted EBITDA 11%, demonstrating discipline, cost control, and execution across our businesses. These results validate the strategy we have been executing against, which is building a diversified global consumer products and pharmaceutical distribution company with multiple engines for profitable growth. We are generating stronger cash flow, allocating capital with discipline, investing behind our highest return opportunities, and building a more resilient business designed to create sustainable long-term shareholder value. Now, turning to our business segments, beginning with Canadian cannabis. In fiscal 2026, Tilray reinforced its position as Canada's largest cannabis company by revenue. Adult use cannabis revenue grew 5% year over year, driven by continued demand for ready-to-consume formats. We drove growth, improved profitability, strengthened our brand and product portfolio, and position the business for continued growth. Our strategy is aligned with how the Canadian cannabis market is evolving. During the fourth quarter, pre-rolls grew 38%, edibles grew 39%, vapes grew 28%, and the THC beverage business grew 6%, increasing our exposure to Canada's fastest-growing product categories. Canada is one of the most competitive cannabis markets in the world, and Tilray continues to lead with the number one market share in pre-rolls, the number one THC beverage, number one in oils, and number one in chocolate edibles, and continue to hold leading positions across every other major product category. Cannabis flower premiumization also remained a strength, with Broken Coast delivering its strongest fourth quarter in 2 years, growing 10% year over year. Looking ahead, our priorities are clear: accelerated growth in vapes, infused pre-rolls, rebuild momentum in flower, expand our medical platform through HelloMD, and continue to optimize our cultivation and production network. Turning to our international is one of Tilray's greatest competitive advantages and one of our most compelling long-term growth opportunities. Over the past year, we established international as one of Tilray's strongest growth engines. On a pro forma basis, our international operation now represents approximately $700 million of revenue. During fiscal 2026, we strengthened every part of our European business, from medical cannabis, pharmaceutical distribution to beverage and hospitality, while delivering record international revenue quarter after quarter since Q2, despite regulatory complexity, pricing pressure, and evolving market dynamics. We strengthened our cultivation and manufacturing capabilities across Portugal and Germany. Portugal, which supplies approximately 85% of our international medical cannabis business, reached approximately 80% utilization during the fiscal year. And now, with ample opportunities to expand, we have a clear path to operate our Portugal facility at full capacity. In Germany, our TLRY cultivation facility is fully utilized, and our new ARX brand has launched successfully with strong early patient response. Our execution delivered strong results. Medical cannabis revenue grew 34% to approximately $85 million, despite permit delays, regulatory complexity, and approximately $21 million in price compression. Germany and the UK each grew 25%. Poland grew 73%. Italy grew 53%, driven by expanded distribution, innovation, and higher volumes. Medical cannabis flower grew 87%, and Tilray remains Germany's leading provider of medical cannabis oils with a 45% market share. CC Pharma continues to be a significant competitive advantage. Through one of Germany's leading pharmaceutical distributors, we reached approximately 16,000 pharmacies and major wholesalers. Fiscal 2026 revenue grew 21% to $327 million, strengthening both our pharmaceutical business and our medical cannabis leadership. Life completes our vertically integrated UK medical cannabis business by connecting cultivation, manufacturing, clinical care, dispensing, and pharmacy services. It gives Tilray direct patient access, stronger demand visibility, and greater participation across the patient journey. Together, our cultivation assets, CC Pharma, Life, Tilray Medical, have created one of Europe's most comprehensive medical cannabis and pharmaceutical distribution business. As we continue to scale, we also are improving profitability. Since the beginning of fiscal 2025, we've reduced our cost per unit by more than 30%, demonstrating the operating leverage we continue to unlock across the business. Turning to our beverage business, in fiscal 2026, beverage revenue was 6% to $254 million, which includes the acquisition of BrewDog in quarter four. Tilray, in the last 5 years, has strategically built one of the most scalable global beverage platforms in the industry. And today, we are a top 100 beverage company with the brand's brewing capability, hospitality footprint, and commercial infrastructure to drive profitable growth around the world. Importantly, as we did not build this through transformational capital spending, we built it through strategic acquisition, operational integration, and brand investment, creating a scalable global beverage business positioned to deliver increasing returns time over time. BrewDog is the cornerstone of that strategy and one of the strongest examples of disciplined capital allocation. We acquired an over $200 million annual revenue business for approximately $54 million with globally recognized brand, scaled hospitality network, and significantly international growth potential. In just a few months, we have stabilized operations, improved product availability, accelerated innovation, and begun unlocking synergies across our global beverage platform. BrewDog has significantly expanded our reach across the United Kingdom, Australia, and other international growth markets, while also becoming the gateway for introducing Tilray's American craft portfolio internationally. During fiscal 2026, we launched 23 American craft beers and non-alcoholic beverages from 9 Tilray brands into the UK, demonstrating how quickly our global commercial infrastructure can scale brands into new markets, and have sold out each of these shipments in the UK in less than 2 weeks. Our pubs are far more than hospitality assets. They're powerful consumer engagement platforms that strengthens our brands, deepens consumer loyalty, generates valuable consumer insights, and creates experience that most beverage companies simply cannot replicate. The World Cup demonstrates the power of that model. Throughout the tournament, including every England match, our 1,800 capacity flagship BrewDog Waterloo pubs sold out, showcasing the strength of our hospitality platform and the demand for our brand. Across the 6-week tournament, our brew pubs generated approximately 412,000 pounds of incremental revenue above budget, welcomed more than 28,000 pre-booked guests, and generated approximately 123,000 pounds in ticket revenue. Our 2 strongest trading days generated 218,000 pounds and 188,000 pounds in revenue respectively. We're continually to build upon this momentum. Our brands also performed exceptionally well. We sold approximately 1.3 million pounds of BrewDog beer during the tournament, led by Lost Lager, while Tilray's American craft beer brands accounted for 58% of all guest beer sales, with Shock Top emerging as the strongest performing American craft beer brand. While we also launched our 1 million pound bar tab campaign, one of the largest consumer activations in our company history, turning fan excitement into a global brand moment across our pubs and digital channels. Together, these activations generated more than 600 million organic creator and generated media impressions, extending the reach of our brand well beyond our pubs. This is the power of Tilray Beverage and hospitality strategy. We just don't own a great brand. We own places where consumers experience them and can come together. That gives us a direct connection to consumers, building loyalty, drives traffic across our venues, and creates opportunities that traditional beverage companies simply cannot replicate. In the United States, Tilray has built one of the country's leading craft brewing platforms. As the 4th largest craft brewer, we combined iconic regional brands and national brewing and commercial capabilities in growing hospitality network and strengthen our brands and deepens consumers' engagement. While the integration and optimization of acquired brands from Molson and ABI has taken longer than expected, particularly in beer category facing broader headwinds, we continue to see significant strategic value in the platform we built. Our distributor network, retail customer relationship, on-premise presence, manufacturing capabilities, and brand portfolio provides the infrastructure to support our beverage business today, while creating meaningful optionality if the THC beverages are permitted at scale in the future. Our exclusive long-term U.S. partnership with Carlsberg, the world's 4th largest brewer, is a powerful endorsement of that platform. Beginning January 1st, 2027, Tilray will brew, market, sell Carlsberg, Carlsberg Elephant 1664 and Kronenbourg 1664 Blanc across the U.S. Carlsberg partnered with Tilray because of our brewing scale, operation excellence, and national commercial capabilities. Innovation remains a competitive advantage. During the year, we expanded our portfolio with Pub Light, Shock Top High Voltage, Sweetwater Big Trip, Popsicle Hard, and a new 10-barrel RTD, extending the trusted brands into faster-growing beverage occasions through disciplined innovation and strategic partnerships. Breckenridge Distillery also continued to build momentum by expanding innovation, strengthening distribution through Southern Glazer's network into New York and California. Today, Tilray has built one of the most scalable and diversified global beverage platforms in the industry across craft beer, spirits, ready-to-drink, energy, beverages, hospitality. We're improving asset utilization, expanding margins, driving profitable growth. While federal hemp-derived THC beverages regulations are still pending in the U.S., Tilray Beverage Platforms is ready to dominate the opportunity with the brands, products, manufacturing, and distribution already in place at scale to win coast to coast. Beverage is becoming one of Tilray's most important growth engines, and we believe we're still in the early stages of unlocking full potential of this business. Wellness is another important engine within Tilray's diversified global business, positioned at the intersection of better-for-you foods, functional nutrition, and everyday wellness. This business continues to benefit from the changing consumer preferences and growing global demand for better-for-you products that leverage health and wellness trends. In fiscal 2026, wellness net revenue grew 9% to $66 million, driven by a continued demand for clean ingredients, functional foods, and everyday wellness products. We see significant opportunities to accelerate that momentum through innovation, expanded distribution, and continued brand investment. As we are broadening our international footprint, we're targeting high-growth markets across India, the Middle East, Asia, where rising consumer demand for health, nutrition, and wellness presents meaningful long-term opportunities. We're also seeing strong momentum with Highball Energy, which has more than tripled since we acquired the brand. Together, these initiatives position our wellness business to become an increasingly important contributor to Tilray's long-term profitability and global expansion. Before I close, I want to expand a moment on capital allocation and the company we built. Every capital allocation decision we have made been guided by one objective: maximizing long-term shareholder value. We have invested with discipline, focused on opportunities that strengthen our operating performance, expand our commercial reach, and improve our ability to generate durable cash flow over time. We continue to believe the market is not fully recognizing the value of what we've built. When you look at the strength of our balance sheet, the quality of our assets, the scale of our business, and the diversification of our global platform, we believe our stock price does not reflect the value of the global enterprise we have built. As we look forward, the focus is execution, converting the assets, brands, and capabilities we have built into stronger margins, higher cash flow, and sustainable profitable growth. Fiscal 2026 demonstrated that our strategy is delivering results, and we believe the opportunity ahead remains significant. Looking ahead, AI will become another growth driver for Tilray across our businesses. AI and data-driven technologies are helping us build a smarter, faster, and more efficient company, from improving genetics, cultivation, yields, quality in cannabis, to optimization demand, planning, production, inventory management, and commercial execution across our beverages, our wellness business, pharmaceutical distribution, and hospitality business. AI is strengthening every part of our operations. We believe AI will enhance productivity, improve margins, and accelerate our innovation. I'll close with this. We entered fiscal 2027 with clear priorities: expand margins, improve efficiency, accelerate innovation, and convert the scale of our business into stronger earnings power. We have a clear path forward, supported by organic growth, disciplined acquisitions, innovation, and global expansion. The next chapter for Tilray is about converting our scale, diversification, and global capabilities into even greater growth, profitability, and long-term shareholder value. We know what we need to do. We're focused on delivery. Carl, you ready?
Thank you, Irwin. Before I begin, please note that we present our financials in accordance with U.S. GAAP and in U.S. dollars. Throughout our discussions, we will be referring to both GAAP and non-GAAP adjusted results, and we encourage you to review the reconciliation contained within the press release of our reported results under GAAP with the corresponding non-GAAP measures. As Irwin stated, fiscal 2026 was a milestone year for Tilray Brands and a clear demonstration of the strength, scale, and resilience of our business model. We delivered record revenue, record adjusted EBITDA, strengthened our balance sheet, reduced debt, and ended the year with approximately $235 million in cash and marketable securities. These results reflect disciplined execution across our diversified global platform and the benefits of operating multiple growth engines across cannabis, beverage, hospitality, and wellness. With a stronger financial foundation, improved cash generation, and significant liquidity, we enter fiscal 2027 well-positioned to invest behind our highest return opportunities, drive profitable growth, and create long-term shareholder value. More specifically, net revenue increased 11% in fiscal 2026, both organically and from acquisitions, to a record $915.5 million, compared to $821.3 million last year. On an annualized pro forma basis, Tilray is now approximately a $1.2 billion global revenue company. Importantly, revenue increased across all four business segments, demonstrating the breadth of our platform, with beverage growth supplemented by the strategic addition of BrewDog. Net cannabis revenue increased 8% to $268.3 million, driven by international demand, broader distribution, particularly in Germany, improved supply availability grown in international markets, and Canadian adult use innovation. These gains were partially offset by lower Canadian medical revenue, softer wholesale sales, and international price compression. International cannabis remained one of our strongest growth engines, with revenue increasing 34% to $84.9 million. Germany continued to lead growth, supported by improved supply and broader distribution, while Poland and the UK also contributed to year-over-year gains. The Life acquisition further strengthens our UK medical cannabis platform for adding direct patient, clinic, and pharmacy capabilities. While international cannabis revenue was impacted by approximately $21.1 million of price compression during the year, it is important to understand that price compression has a direct impact on profitability, as it largely flows through to gross profit and the bottom line. Even with that headwind, we sold higher gram equivalents and continued to generate attractive relative margins. That reflects the strength of our international platform, our ability to allocate inventory to higher return markets, and our focus on building the infrastructure needed to support profitable growth as European medical cannabis expands. We are currently harvesting at an annualized rate of more than 30 metric tons from our Portugal facility, up from 4 metric tons 24 months ago, a significant increase in capacity to meet growing demand without significant capital investment. In Canada, gross adult use cannabis revenue increased 5% to $236.4 million, supported by innovation across multiple product categories, including pre-rolls, vapes, edibles, and THC drinks. Canadian medical cannabis revenue decreased 5% to $23.7 million, predominantly due to Veterans Affairs reimbursement changes, which we calculate for fiscal 2027 will have a $4 million a year impact on revenue. Wholesale cannabis revenue decreased 60% to $7.3 million, reflecting our disciplined reallocation of inventory to higher margin international markets. We also continued investing in cultivation, including the decision to restart our Quebec facility to support demand in Quebec, Canada, and internationally. The product from Masson will first reach market in September. Early harvest suggests yield improvements of 20% from the last time we grew cannabis in the facility. Another example of capacity increases without significant capital allocations. Distribution revenue increased 21% to $327.2 million and was driven by competitive pricing, higher velocity SKUs, increases in average selling price and units sold, and favorable foreign exchange. Together with our international cannabis footprint, this platform gives Tilray meaningful scale, infrastructure, and access across key European pharmaceutical channels. Beverage revenue increased 6% to $254 million, including $51.1 million from BrewDog following the acquisition in the fourth quarter. On a run rate basis, BrewDog adds over $200 million in annual revenues in the UK, Australia, and the US, and expands our international beverage scale, brand reach, and hospitality footprint. Excluding BrewDog, our legacy US beer business reflected broader industry dynamics, but we continued to take disciplined actions to improve the quality of revenue and strengthen profitability. These margin-focused actions reduced revenue by approximately $16.6 million during the year, but support more profitable growth over time. We also made progress with spring resets, with our legacy US beer brands capturing a greater share of craft shelf space. Wellness revenue increased 9% to $65.9 million, supported by product innovation and continued momentum in highball clean energy drinks. By revenue contribution, cannabis represented 29% of net revenue, beverage 28%, distribution 36%, and wellness 7%. Gross profit increased 8% to $260.4 million. Gross margin was 28%, compared to 29% last year, while adjusted gross margin remained consistent at 29% in both periods. Despite higher revenue, adjusted gross margin was largely unchanged, as disciplined cost management and operating scale helped offset the impact of international cannabis price compression and a greater mix of distribution revenue. By segment, cannabis gross margin remained strong and consistent at 40%, as international price compression offset the benefit of higher gram equivalents sold. Beverage gross margin was 36%, compared to 39% last year, while adjusted gross margin was 37%, compared to 39% last year. While margins reflected lower overhead utilization, higher input costs, and portfolio mix, we see a clear opportunity to improve the profitability profile of this business. BrewDog is margin accretive to our beverage segment, with gross margins expected to be meaningfully higher than our legacy US beer platform. We have also strengthened our beer leadership team with the appointment of a chief operating officer, whose primary focus in fiscal 2027 will be to find cost savings through right-saving our footprint and cost structure to support stronger margins, greater operating efficiency, and more profitable growth. Distribution gross margin increased to 12% from 11% due to favorable changes in product mix and increases in average selling prices. Wellness gross margin increased to 33% from 32%. The increase was driven by strategic price increases that largely offset an unfavorable change in sales mix. Net loss improved significantly to $105.2 million, or $1.09 per share, compared to approximately $2.2 billion, or $24.56 per share last year. The improvement was primarily driven by the absence of the approximately $2.1 billion non-cash impairment charge recorded in fiscal 2025. Adjusted net income improved 87% to $12.2 million, or 11 cents per share, compared to adjusted net income of $6.5 million, or 7 cents per share in the prior fiscal year, which represents our continued focus of improving profitability. Adjusted EBITDA increased 11% to $61.1 million, reflecting revenue growth, gross profit improvement, and continued operating discipline. The result was impacted by approximately $2.3 million in unanticipated fuel surcharges. Excluding that impact, adjusted EBITDA would have been $63.4 million, which is within our guidance range, highlighting the underlying strength of the business and consistent with the risk we identified when we reconfirmed guidance in Q3. Cash used in operations improved to $69.1 million compared to $94.6 million last year. Before working capital investments, our operating businesses generated $18.2 million of cash from operations, representing a $50.3 million improvement year over year. This demonstrates the underlying cash generation of the business, while our working capital and capital expenditures reflect deliberate investments to support growth across BrewDog, international cannabis, and our broader platform. Cash used in working capital was $87.4 million for the year, compared to $62.6 million last year. The increase was primarily driven by approximately $50 million of working capital impact from the BrewDog acquisition, together with inventory investments to support international cannabis growth. The BrewDog working capital impact was largely timing related, because the pre-closing receivables were not able to be acquired as part of the administration process. The revenues generated after closing had not yet converted to cash by year-end, reflecting standard 60 to 90-day payment terms with UK grocery customers. Overall, we view these investments as deliberate and aligned with our highest return opportunities, including BrewDog and international cannabis, as we continue to build scale in markets with long-term growth potential. Adjusted free cash flow improved to negative $86 million, compared to negative $114.2 million in the prior fiscal year, reflecting meaningful year-over-year progress. This result included nearly $50 million of working capital investment in BrewDog and approximately $30 million of global capital investments back into the business toward our long-term strategic initiatives and build a higher growth, more scalable platform for the future. Turning to our fourth quarter results, total net revenue increased 25% to $281.7 million from $224.5 million, with growth across all four businesses. Cannabis net revenue was $71.5 million after $19.1 million of excise taxes and was comprised of $57.3 million in Canadian adult use, $27.2 million in international cannabis, $5.4 million in Canadian medical, and $0.7 million in wholesale revenue. International cannabis revenue increased 22% year over year, continuing its growth trajectory with its third consecutive quarter of more than 20% year-over-year growth, and represented the second consecutive Q4 that international cannabis revenues were up over 20%. Beverage revenue increased 61% to $105.6 million, including $51.1 million from BrewDog. Distribution net revenue increased 15% to $85 million, compared to $74.1 million in the prior year quarter. Wellness net revenue increased 16% to $19.7 million, compared to $17 million in the prior year quarter. Fourth quarter gross profit increased 34% to $90.5 million, and gross margin improved to 32%. By segment, cannabis gross margin remained consistent at 44%, beverage gross margin remained consistent at 38%, but improved on an adjusted basis to 40%. Distribution gross margin increased to 14% from 10%. Wellness gross margin remained consistent at 33%. Fourth quarter net loss improved significantly to $37.9 million, or 43 cents per share, compared to approximately $1.3 billion, or $13.01 per share last year, primarily due to the absence of the prior year non-cash impairment charges. Adjusted EBITDA for the fourth quarter increased 15% to a record $31.9 million, compared to $27.6 million in the prior year quarter, reflecting strong quarterly execution. In the last year, we, one, allocated capital to pay down our convertible notes balance in advance of their maturity in fiscal 2028. Two, allocated capital to build our cash reserves for strategic acquisitions and to integrate previous and current acquisitions into our core business before beginning to replenish our cash reserves late in the year, particularly around the U.S.'s rescheduling announcement. 3, utilized $54 million of the cash reserves to purchase the BrewDog entities and Life. And 4, utilized approximately $50 million of the cash reserves to fund the initial working capital needs of the BrewDog entity. These actions reflect our focus on reducing debt, maintaining balance sheet flexibility, and investing behind opportunities that support scale, integration, and profitable growth. Cash used in operations was $37.3 million, and adjusted free cash flow was negative $43.4 million for the quarter, which included the previously mentioned $50 million investment in working capital at BrewDog. We ended fiscal 2026 with cash, restricted cash, and marketable securities of $234.6 million, providing financial flexibility as we enter fiscal 2027 and continue investing behind our highest return opportunities. Since the beginning of fiscal 2026, we have significantly improved our capital structure as we've reduced debt by approximately $60 million, including $25 million repaid on term loans and $17 million of convertible debt non-cash settlements during the fiscal year, as well as a further $18 million of convertible debt non-cash settlements after year-end. Since April, we raised $87 million of gross proceeds, or $84.9 million net of commissions and other fees, through our ATM program at an average sales price of $6.77 per share, including raising over $50 million in the 5 trading days related to the U.S. government's announcement of rescheduling medical cannabis to Schedule III. We intend to use ATM proceeds for strategic and accretive acquisitions, investments, and capital expenditures, including opportunities in the U.S. and internationally, just like the BrewDog opportunity. We ended the year with an improved net debt position of less than $1 million compared to net debt of approximately $14 million last year. Overall, fiscal 2026 was a year of meaningful progress. We increased scale, strengthened our balance sheet, improved adjusted EBITDA, enhanced our international cannabis and distribution platform in Europe, and expanded global beverage through BrewDog. Importantly, we did this while maintaining a disciplined financial approach and continuing to invest in the areas where we see the strongest potential returns. As we look to next year, our priorities are clear and financially disciplined: profitable growth, margin expansion, integration, operating efficiency, stronger cash generation, and disciplined capital allocation across the businesses. For fiscal 2027, I already mentioned our revenue run rate of approximately $1.2 billion. We expect our combined international business revenue to be approximately $700 million, or 60% of our consolidated revenue. We have no pending maturities on our debt, yet continue to constructively reduce the current $70 million outstanding balance in advance of its 2028 maturity. And lastly, we are providing guidance of adjusted EBITDA between $68 and $75 million, representing a double-digit increase from fiscal 2026. Operator, we can now open the call for Q&A.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the start keys. And our first question will come from Kaumil Gajrawala with Jefferies.
Hey guys, that was very thorough. Thank you for that. If I may try to, maybe simplify for investors, how do you think about the whole machine moving together with all its various parts now? Is there an adjustment or a long-term algo that maybe, some periods things will be better, some periods things will be worse, but what is the sort of entirety at the group level? Which direction should it move, at least in terms of the environments that we operate in now?
So thank you for that question. And again, it's an interesting question because number one, if you go back and whether it's brand by brand, and as last week, as I sat through our strategic planning meetings and board meetings, and I looked at what's in Tilray brands today, it's pretty amazing. And not that I'm, complimenting myself and my team, but it's pretty amazing what we own in brands, businesses, infrastructure, distribution today. And again, as we started in the cannabis business, and we started from basically almost scratch in Canada, we built a $200 million plus cannabis business in Canada with a population of 40 million people, and half the population cannot enjoy cannabis. So it's what we built in Canada with high excise tax, something called COVID in between, and we went ahead and built that. And again, the opportunities in Canada are tremendous in regards to ready to drink, cannabis drinks that ultimately, hopefully, will be sold in beer stores, hopefully, sold on tap is the opportunity there. And as more and more consumers consume cannabis, we think there's a much bigger business. As a matter of fact, in the month of January, which is a dry January, there was more cannabis consumed than alcohol. So we see tremendous opportunities in cannabis. We see the growth there continuously, both in recreational and major and medical. And medical, if it's sold through drugstores, which is the case in Europe. So that is the machine there, but the machine there also encompasses us getting much bigger into the beverage business with our brands in Canada. And we see a much bigger business in Canada, with cannabis drinks that will be sold whether on premise or in the Canadian beer stores or liquor stores. Listen, the U.S., sometime in my lifetime, I hope I will see legalization happen, whether it's a medical standpoint or recreational. I think we will see medical standpoint. There's lots of movement on peptides, psychedelics. So with that, as we had to parlay into some type of businesses with synergies, is the beer business and the beverage business and the wellness business. And from a standpoint, if I always say this here, if I could sell cannabis drinks in the U.S. today, it would be $1 billion business for us. Ultimately, there's lots of discussions going on with hemp drinks. So what Tilray has today is a beverage business in the U.S. It has 8 manufacturing facilities. It has 18 brands. It has a major distribution system. As we know, we have that 3-tier distribution system with 900 distributors. We have a major sales force in place. So we have infrastructure in place for consumer products. And ultimately, is it connected with hemp-type products? Is it THC products? Or is it just consumer products? And what you heard me say, within the alcohol industry, beer is, the most consumed alcohol. Also, we've gone into the water business with Liquid Love. We've gone into the energy business with Highball. So we have the infrastructure, we have the brands, we have the manufacturer, we have the distribution, we have the sales organization in place. So good diversified business. Europe, which today, ironically, is our largest business within all of Tilray, and probably not getting the value for it. But on the other hand, if you come back and look already, we've built $100 million medical cannabis business throughout Europe today. And that will continue to grow, and there's opportunities we're seeing in India and other places. As you see today, what we've built in regards to our distribution system, and when we acquired that distribution system, it was acquired as part of a tender. But what we're seeing with that distribution business today, how it's becoming a major vertically integrated business within Tilray Medical, and what it's helping us with licenses, potentially a compounder for pre-rolls and vapes, or depends what happens in the whole psychedelic market. And then last but not least, the acquisition of BrewDog has been phenomenal for us. It's given us 16 brew pubs in England, Scotland, London, and Ireland. It's given us a couple in Australia. It's given us 16 franchises out there. And with that, we can see us building our beverage beer business throughout the rest of the world. And so far as we introduced our American beers, in the UK for the World Cup in our brew pubs, I mean, it almost became half of our sales over there within our brew pubs. So bringing it all together, we have brands, we have manufacturing facilities. 93% of our products are made by ourselves. We have distribution systems. So we, basically we're not a one-trick pony, but does it all come together with cannabis? Does it all come together with beverage? Or does it all come together with wellness and consumer products businesses? And with that, we built a strong balance sheet, and we built, a good company that's got a lot of brands in it. So there's many, many, many ways for it to come together. And, what I'm not sitting here today waiting for, as MSOs are a lot of others, is legalization, rescheduling to happen in the U.S. If it happens, and, as we said, we're on a run rate to $1.2 billion, none of that is basically projected in any of our numbers.
Okay, got it. And then on the recent, the recent acquisitions on, becoming more vertically integrated, why is that the right structure to have sort of full vertical integration on the medical side, as opposed to, either being on one end of it or the other, given your infrastructure, you probably had the choice, but, you've made the two big moves on becoming a bit more vertically integrated. So, what was the decision process behind deciding that's how you wanted to approach the market?
So, just number one, it's grow and consistency of grow. It's the genetics out there. It's the potency. And basically, from a cost standpoint, one of the big things, as you saw a lot of Canadian growers dumping product in the marketplace, one of the reasons, a lot, of distilleries, a lot of pharmacies want to deal with us. They know they're going to get consistent growth. They know they're going to get quality. They know the genetics we can use. They know the potency we can use. And with that, if we're going to invest money, which we are in research and development, and doing testing and that out there, we want to know what's coming out of our facilities. And today we have over 6.5 million square feet of grow around the world, where we know, depending on where the market goes, we're going to have to get consistent growth. So we're not going to be out there buying in a spot market. We're not going to have to go out there and try and buy different genetics and different potencies and different products, whether it's for pain, anxiety. We can plan all that out ourselves. So that's very, very important for us. What we did in the UK with our Life acquisition from a vertical integration today, we have the doctors on staff, we have the pharmacy on staff, and ultimately we are supplying that facility. So we've made a lot of good moves in regards to the cannabis business from a vertical integration. We've made a lot of good moves in regards to the beverage business with the UK acquisition of BrewDog. There we have a major manufacturing facility in Aberdeen, Scotland. We have 16 brew pubs, which we control, what goes in those brew pubs, what is being sold, what is being tested. And then, it expanded our footprint throughout the rest of the world.
Great. Thank you.
Thank you.
And our next question will come from Robert Moskow with TD Securities.
Hi, this is Victor Ma on for Rob Musko, and thanks for taking the question. So my first question is on beverages. It seems like 4Q organic growth, excluding BrewDog, was down 17% despite the World Cup. I know the BrewDog acquisition and Carlsberg partnership will contribute outsized growth next year, but what gives you confidence that you can still fix the company's underlying beverage brands?
So number one, the decline is a couple things. We went through a major SKU rationalization, some brand rationalization. So some of that was basically, self-inflicted. And then ultimately where, businesses that we were just not profitable. As you take our beverage business and we're the number 4th largest craft brewer. We put this business together in 2020. We bought Sweetwater, we bought Montauk, Green Flash, Alpine, Nelson's. We bought the 8 businesses from ABI, and then the 4 businesses from Molson's, which we ultimately sold one. So with that, there was integration that we had to do. There was facility closing we had to do. There was SKU rationalization. There is distributor rationalization, and something, in between those 5 years was something called COVID, where on-premise was closed. So, and let's not, run away from it. The beer category declined 5%. So with that, we have done a major overhaul, and with new products, with going through the SKU rationalization, with really focusing on certain regional markets, and Shock Top and Carlsberg will be our 2 national brands, and the rest will be regional brands. We feel good going into this year that, we'll get the growth. We've also brought in new people in regards to the operations and taking some costs out. So with that, we feel very good about going into this year with our beverage business.
Got it. Okay. And then my second question is on Canadian adult use growth. So it seems like this slowed sequentially to 3.2% in 4Q from 9% in 3Q. What was the split in this 3.2% between volumes and pricing? And can you provide color on what drove the slowdown? Was it negative mix? Was it market maturity? Any color would be appreciated.
So I have Blair McNeil on, who runs our Canadian business, but I'll jump in first. First of all, it was 5% growth on recreational cannabis is number 1. Number 2, some decisions again we make, and that was supply for our international business. We did not supply any wholesalers, and we got away from that. And we focused, and that's why our margins are up. We focused on businesses that are going to contribute margins to us and going to contribute, profitable growth instead of just going out there and being in the price competitive market. Listen, I've come out and we talked about our growth in pre-rolls, our growth in chocolate edibles, our growth in vapes. Our growth was down in flower. And, the flower market is being cannibalized by pre-rolls, vapes, and other categories. So that was the main reason there. But it was not really on price. It was some of these, again, are decisions, and that's why you see our margins improve overall within the company. Blair, anything you want to add to that?
No, you're exactly right, Irwin. That was 90% of that was mix. We actually had a little bit of positive pricing contribution on top of that, but it was the international shipments and the deprioritization of wholesale.
Got it. Thank you.
And again, that comes back to the point before about being vertically integrated with our own supply. We don't buy cannabis from anybody else. We don't depend on, a spot market, other pricing out there, different terpenes, different genetics. We know what we grow. We plant it out there ourselves. So that's what's important for us. And there's big time demand out there to buy cannabis from us, and that's not the business we're in. We're not going to supply our competitors, and ultimately, hopefully, grow it to sell within ourselves. So that's what's important for us, that we have the growth out there that we have today. And this past year, Blair and his teams went ahead with the facility in Masson, where originally we were growing cannabis and cucumbers, and converted that back to 100% cannabis, which majority of it sold into the Quebec market. We have an outdoor grow in Cayuga. And with that, we're using it all between Canadian business and our international business to have consistent supply and make sure that we have supply.
Great. Thanks for the color.
Thank you.
And we'll go next to Aaron Gray with Alliance Global Partners.
Hi, good evening, and thank you for the questions. Just regarding EBITDA, quick question there. First off, in terms of the sequencing for the year, just with the BrewDog acquisition, seem to expect the same quarterly sequence that we've seen historically for you guys. And then a bigger picture question. How best to think about maybe the medium-term EBITDA margin aspirations and where you believe you can get the company to on a profit margin perspective? Thank you.
I'll let Carl answer the first one, and I'll tell you my aspirational EBITDA percentage, okay?
So we've talked about this before on other calls, Aaron, and I really don't think it's gonna change with BrewDog. We might see a small softening, but realistically, we're still looking at quarters 1, 2, and 3 being roughly half the year, quarter 4 being the other half of the year, and within quarters 1, 2, and 3, you should see a relatively even breakdown on EBITDA. Now, that doesn't work perfectly. There's a little bit of room in each of those pieces, and you can see this year we actually beat the 50% in Q4 by a little bit, but it's a really good rule of thumb for our business.
So my aspiration, and again, you got to look at us from our product or branded products business. If you look at our business today, I'd like to see us a 15 to 18% EBITDA business, okay? But you got to back out of there is our distribution business with 5%, 6% margins. With that at 11.2 today, I think if you backed out that part of our business, our EBITDA percentage would be a lot higher. So from a standpoint of that, it's 15 to 18%, including our CC Pharma business, because we're looking to transform that business in many, many ways, where it is a compounder, and it is a seller of cannabis products, which much higher margins. So that's what I would aspire to, 15 to 18% EBITDA margins. I'm not telling you that's this year, but over the next couple of years, absolutely.
Appreciate that color. That's helpful.
We saw a great increase in our EBITDA percentages this year.
Appreciate that. Thank you, Warren and Carl. Second question for me, just as we think about the U.S. opportunity, with phase 1 rescheduling for FDA medical, potential for phase 2 coming, just wanted to kind of double back. I know you provided, some commentary already, but, how are you thinking about potential, M&A within the U.S. as we've seen some plant touching, operators now uplist to major exchanges? Does that open up more opportunity for you to, enter the U.S. organically or inorganically? And does that change potentially, with phase 2 whole plant rescheduling anticipated to come in the fall? Thank you.
So, as you step back, and since I've been at this, everybody's talked about how we got to do the U.S., how we got to do the U.S. Neither I nor no one else has truly figured it out yet. It was number one, if you bought a medical business in a certain state, you could use that, but what's your limitations there? In regards to rescheduling, what I can say is this here. If rescheduling happened tomorrow and it was federally legal, and you had to go through the FDA and get the FDA approvals, we'd be right in there to spend the dollars on the research or taking some of the research that we've worked on in other countries in regards to cancer-induced drugs, epilepsy, pain, anxiety, etc., and taking our findings there and going to the FDA. So, and then as we've talked about, and the question I was asked before about vertical integration, and hopefully supply-wise, we would have enough supply to be able to supply it into the U.S. So we're ready with supply, we're ready with brands, we're ready with research, we're ready with historical cannabis that we sell in countries today that are prescribed by doctors. It's just, what is the path you go down here with the FDA? And is the FDA ultimately going to approve cannabis as a medical drug to be sold in distilleries? I'm not sure that's the right thing, that you walk in and you get someone in a distillery that's recommending certain medical cannabis. And should the right way be similar to what's in Europe? It has to be prescribed by a physician, it has to be prescribed by a pharmacist, and that's the way it should be done. So again, Tilray is ready for it. Acquisition-wise, we'd be ready to acquire. And the reason we haven't jumped into this or we're listed on a NASDAQ exchange, so we don't have to do what some of the other companies do to get listed. But we're going to wait and see, and once we know the path, we'll be ready to jump into it because we're in this business as one of the largest growers in the world. I've never been lucky buying a lottery ticket, so I never, really wanted to take a guess what's the right way to go about this until we know what the course is. And like I said, I've been down the path where we looked at it many, many ways, but it just did not make sense for us. And we've looked at, do we buy compounders? Do we buy different things? But is that the right path? So we're going to be disciplined and really know what is the right path before we just jump in and buy anything with a clear path, but knowing what we bring to the party.
Okay, great. Appreciate the color. I'll go ahead and jump back in the queue.
Thank you.
And our next question will come from Pablo Zuanic with Zuanic and Associates.
Good afternoon, everyone. I realize it's been a long conference call, but congratulations on the progress you've made in fiscal year 26. Look, my first question, as some U.S. companies get ready to export and claim they have a very low-cost base, can you comment first on how cost competitive is Tilray in the export markets? And second, your views on when U.S. companies may be able to export and whether they can be cost competitive versus producers like yourselves. Thank you. So,
as I've displayed in our U.S. or our European cannabis business, Pablo, I mean our supply and our growth, all that is coming from Tilray. So I think what's important is ultimately one thing we see is the growth opportunities internationally. And with those growth opportunity, it's going to need supply. We know where there is growth internationally. And I think the thing is this here, we know, and what a lot of our customers are knowing, that Tilray will be able to supply and supply to the custom of what, the customer wants in regards to oils, in regards to the potency, the genetics, etc. And today, with almost 1 million square feet of grow in Portugal and Germany, and close to 5.5 million square feet in Canada, we have plenty of supply to go about supplying growth in Europe. And again, I come back and I say this here, and why was I aspirational on my EBITDA numbers? I think we can be, one of the lowest cost producers out there just because of our scale and size. Because if you're buying from a third party, Pablo, everybody else got to make margin. We got to make margin among ourselves and then sell it to the end user.
Yeah. No, understood. Look, and I'm sorry to go back to the U.S. question. I think you covered most of it with Aaron, of course, but I know you keep talking about knowing the path, but let me give you this scenario, right? Let's say the U.S. reschedules medical, they already did, and also recreational, but they keep the current state silo model, and there is no FDA oversight. So it's not the medical model that you have in Europe. In that case, would you still want to enter the U.S. market, and how? Or would you prefer to wait for interstate commerce and clarity on import and exports and FDA direct involvement?
So, again, would we enter the U.S. market, on all states that are legal? I'm not sure. Would we look to enter the big states where there is opportunities? Yes. Would it be more costly? Yes. And again, it's kind of coming back and doing the economics. Does it make sense? And I come back and say this here, if it did happen in this administration, would it change in the next administration? So that's what we would have to weigh out, is all the components and what's, real and what's not. Canada today, we know the country is legal, both recreational and medical, and staying there. We know what's happening in Germany. We know what's happening in Poland. We know what's happening in the UK. What I wouldn't want is us to buy certain medical licenses in certain states. And ultimately, the next administration changes that.
That's good. Thank you.
Thank you.
We'll hear next from Brenna Cummington with ATB Cormark Capital Markets.
Hey everyone, thanks for taking our questions and congrats on the quarter. Just a quick question from us regarding CC Pharma. The gross margin improved to what I believe is the highest level ever seen. Please correct me if I'm wrong. But could you just provide some more color on the key factors that underpinned this improvement? And then as a sort of secondary question to that, you mentioned in response to one of the earlier questions that you're looking to transform the CC Pharma business in a number of ways. Could you elaborate a little bit more on that and then maybe provide some color on how we should think about that segment's gross margins going forward?
Right. I have Rajni Sori, who is our head of international, on the phone, and he can jump in. But number one, the big growth there is having different medicines to supply and growing our footprint in Germany from 13,000 drugstores to 16,000 drugstores. Our gross margin improved, 14%, and that's just a good array of mix. And it also is us just buying medicines at much better prices. And the big thing there is having the capital available to do it. In regards to CC Pharma, one of the big things that we're looking at CC Pharma is having CC Pharma as a licensed cannabis facility that can store and sell cannabis. At the same time, can become a compounder. And as a compounder, you can compound and we could sell pre-rolls, we could sell vapes, and we can do different things with cannabis. So looking to do a lot and also looking to expand the CC Pharma format, whether it's in the UK, whether it's in Italy and other different countries. So that's what we're looking to do with CC Pharma and also looking at it from a medical direct-to-consumer standpoint. So there's some of the things, whether we're looking at growth, we're looking at improving the margins, and we're looking to expand it throughout other parts of Europe. Raj, just anything I missed on that or anything I need to be corrected on?
No, I think correct, Evan. I think CC Pharma has been, as you rightly said, first a portfolio management and margin improvement basis, which is really looking at the right portfolio and also the right decision making in buying, the right capital allocation to use it effectively in running the business profitably. And then I think on the compounding and the way how we want to structure the medical cannabis business through CC Pharma improves high value businesses and therefore finally affects the margin and the bottom line in the business. And thirdly, I think the extension, what we just talked about, I think we are already now in UK. We are working with our partners in UK, in the NHS hospitals, etc. We are making inroads into Italy. We are looking at businesses outside the European market, into the Middle East markets, where we are talking to certain partners there. So that all is going on. And then finally, a direct-to-consumer model for specialized services which we will provide in the German market. So, I mean, there are a lot of pillars of CC Pharma which we are working on today to see how the business grows there.
And the big thing here is CC Pharma is a $350 million business. If we can grow, which our plan, and it's a big part, our gross margins by another 5 to 7 points, what that is to contribute to our bottom line. So that's the big thing when you're asking me the questions about where you're able to can go, the growth here, is just taking our existing businesses and growing the gross margin and taking more costs out of our business. And again, like I said, there's a lot of costs that putting all our beer businesses together and purchasing today. There's close to a $500 million beer business today, excluding, Carlsberg coming in. If you come back and look at CC Pharma, there's $350 million of sales. So if you can grow just these businesses without, organic growth, without other acquisitions, what we can drop to the bottom line by improving the gross margin on both of these, which is substantial.
Yeah.
And our next question will come from Indigo Bayless with Canaccord Genuity.
Hi, good evening. Congrats again on the quarter and especially your performance in the international cannabis. I was hoping to understand really how you expect to see the international cannabis business grow, especially having seen this 34% in fiscal 26. And then also, if you have any commentary around how you plan to really protect margins, especially as you bring on your full capacity of your Portugal facility.
So a big part of the growth is having supply where we did not have supply throughout last year. The second part is, we've really worked with both the Portuguese government, the German government, and other governments not to depend upon delay of permits. And that's a big thing. What you got to realize in Europe, and what I think a lot don't understand is the regulatory environment that we play within here. So when we get a PO, we need to get a permit from that country. We need to get a permit to ship into the other country. So it's the speeding up of permits. The next thing is this here, just the demand for medical cannabis in these countries continues to grow. Last year, we were maybe less than $5 million of what we sold in the UK and what we've added now in regards to our Life acquisition. So where's our growth coming from? Number one, having supply. Number two is ultimately our speed of permits, and that way, they can reorder. Number three is with our Life acquisition and being vertically integrated there with both the doctor part and with the pharmacy part. And as we look to grow into new markets, we potentially will talk about another time what some of the things we're potentially doing in India and other countries. So that's how we expect to grow our international cannabis business from a standpoint. The big thing is having supply. And listen, we went through some major price compression in Europe this year too, and we're able to deal with it.
And this now concludes our question and answer session. I would like to turn the floor back over to Irwin Simon for closing comments.
Thank you, everybody, for joining us today and listening to our fiscal 2026 year. It was not without its challenges. It was not without its opportunities. And you come back and think about, what we accomplished in regards to our Canadian cannabis business. As we started the year off, we had some challenges with grow, but Blair and team overcame that and how we dealt with that, increasing our revenue and taking some costs out of business and dealing, with some of the challenges out there. In regards to the beer market, with the beer market being down and bringing all these brands together and really growing the distribution out there with new products and timing on new products and pods and making sure that we're able to, supply and not get left behind. Winning and doing a deal with Carlsberg, the fourth largest beer producer in the world. And it's incredible what Carlsberg sells in the U.S. today. But trust me, they just didn't put their hand up and say, I'm picking Tilray. And they are pretty, stringent on the quality, the product, the partnership. And we worked with them pretty thoroughly to be able to go ahead and produce Carlsberg beer, which will start here in January 1st. In regards to our wellness business and some of the restrictions on hemp, our growth in highball, we felt this year we had some, with our Delta 9, we thought we had a good-sized business, and Mitch McConnell and crew decided that they wanted to block this, and let's see what happens there, because there is potentially some things going to change there. In regards to BrewDog, listen, I am really excited about the opportunities in BrewDog. At Tilray, we looked at this before, and valuations were in the hemisphere, and sometimes in life you're better off being luckier than smart, and we got lucky here, and I think we've acquired a great brand that gives us an entree in taking our beer brands into international markets, which would have been very, very difficult for us. So we're set up for a lot of great things in 2027, whether it's our balance sheet, whether it's our brands, whether it's the businesses that we have in here. But last but not least, I can't stop thinking about how great our people are. And, there's close to 4,000 people within Tilray today, and they work pretty damn hard. And I'm very lucky and fortunate to work with them. So I want to thank all our people out there that are part of Tilray today, because they are the major part of our success. We have a board that works very hard on multiple things, and I want to thank them. I want to thank our consumers that buy all our products, whether it's pre-rolls, whether it's vapes, whether it's flower, whether it's our beer, whether it's our hemp products, whether it's visiting our brew pubs. I want to thank you for the support. And, it was very interesting during the World Cup. And when I was in London for the World Cup during the England games, and especially our Waterloo facility, where we would attract close to or over 1,800 people along the way, when I'd be on our way to our brew pubs, I could pass 50 brew pubs on the way there, but they were coming to BrewDog, and they were coming to our facility because of our food, because of our ambiance, because of the energy there, and hopefully, which they were, to buy BrewDog beer. So with that, I really think we're really in a good spot. And you come back and you look at companies, you look at your brand, you look at the financial situation, you look at what they've done, you look at the people, and we check a lot of boxes. Disappointed in how our stock performed, and not the rewards we get for that. But we'll put our heads down and we'll keep plowing. At the end of the day, we know what we got, and we know what we should be valued at, and that's something that we will continue to do. I want to thank everybody for jumping on our call today. Enjoy the rest of our summer. Hopefully go out there and buy some of our products, because we got some great products, and we look forward to talking to you in the near future. Thank you very much.
Ladies and gentlemen, thank you for your participation. This does conclude today's teleconference. You may disconnect your lines and have a wonderful day.
All right, that was, wow, a mouthful. Yeah, you're never gonna have a Tilray earnings call and it go under an hour. That's one thing that I've always grown to expect. So, what are we at now? We're at 120 viewers. We are now an hour and 42 minutes in. Wow, crazy. Yeah, so I had to chuckle there a little bit when he said he was disappointed on how the stock performed. Well, you could have reached out to me and I would have told you that it's going to get absolutely decimated. I even warned them. I had a call with them after the reverse split. I was like, holy crap, enough is enough. I sent them an email and I gave them my full and not so PG-13 thoughts on everything. And the stock absolutely rocketed after the split, but again, as we know, it was a long process. Rescheduling got delayed, and it still hasn't even happened. So they did the split, and then we had a bear flag. I remember posting videos saying we're going to $5 from $10. I was warning at $10 we're probably going to $5, and then we had a daily bear flag saying 386. 2 days ago we hit 380, and we have this weekly bear flag targeting 350. So if anybody's surprised by the stock price, I don't know what to tell you. Like, I've been warning since early January that, hey, this is not good. We're probably going to continue to slide. We've got multiple factors from a fundamental perspective, right? We had tax law selling. We had the executive order, but it took like 4 months before they even did anything. So why would you enact the reverse split before the executive order when you didn't even have a warning? That's just shooting yourself in the foot. That's asking for the share price to absolutely plummet more. Why would you buy Bitcoin at all-time highs and then see it crash over 50% and not just buy your own damn stock at all-time lows, right? Like, it doesn't make any sense. You're not worried. You're not, like, if you thought the price was going to go up, that's even worse. Like I said, a monkey could have figured that this was going to be bad. And not only that, not just from the fundamental standpoint, the technicals were also showing it as well. And then as we get closer to that $5, what do you think? They even said the reason why we're doing the reverse split is to be over $5 so institutions can buy. Well, that's funny because VFF got a bunch of money from an institution at $2. They didn't have to be over $5 to get institutional money. So what the hell? Make it make sense. Doesn't make sense. The only thing that makes sense is they're deliberately trying to just shoot themselves in the foot. So I don't know. Like, are they working with shorts? Are they working with the hedge funds and the institutions to get them as low as price as possible for as long as possible? That's the only thing that makes sense. Because if they were watching my channel, ever since we were we were at like $10 or $11, and I said, hey, this thing's going to like $5, and then when we were at $5, I was like, this thing's going to $3.86, and then $3.50 bear flag, and here we are at $3.80. Right? It's like you literally can't make this stuff up. Where was it that I posted it? Like, how long ago did I warn? Where is it? Yeah, right here. Another bearish $5 incoming. This was 4 months ago. Let me just bring it up here. Yeah, and sorry for the at the beginning when I first started the stream, I had the conference call on too. So yeah, this was another one. I think this was a different. Yeah, so we had the descending triangle. Yeah, it was 512, and then we had another bear flag that formed. My bad. But yeah, I was warning. Even at $10, I was like, this isn't looking good. And I remember some people in the Power Group private community, some of the members in there, they said they were selling at $10. And they're able to rebuy at $3. So I'm not telling you to buy, sell, or hold. I didn't even sell any shares. I just didn't buy anymore. But a lot of people think that I have a lot of Tilray shares. I actually don't have that much. Like, I have way more money in crypto than I do in MJ. Like, my number one crypto holdings XRP, and that position dollar-wise is worth more than the rest of my crypto portfolio and my entire MJ portfolio combined. Like, I've never been more confident in an asset than XRP. But yeah, like what? If you're the CEO of an MJ company and you didn't know this and you're surprised and you're disappointed by the stock price, even more reason to get the hell out and get a new one, because there was at least 10 different signs saying that, hey, we don't even have a warning. We don't even have rescheduling executive order yet. They did the reverse split in November. We got the executive order in December, and then we didn't get real movement until, and we still don't even have rescheduling. It might be done before the midterm, so it could be a whole year later by the time we get full-blown rescheduling. So that means they could have got a warning, which would have took 30 days, then 6 months, then they could have got an extension. That's over a year. So we could have just waited until now, and now we're back under $5, so the whole reason of doing it to be over $5 again doesn't even make any sense. It's out the window. It was all for nothing now, right? And then they save like $1 million in the NASDAQ fees for having less shares. Okay, well, don't buy Bitcoin at all-time highs. Use that $1 million, and there you go. Problem solved. So that's solved. But yeah, it's like you could have just waited, not did the reverse split. We're almost a year later, still no rescheduling. And if push came to shove and you got your extension and you were still under $1, well, then do it then. But like, to do it and be back over $10, like the fact that we were at, what did we hit, like 19? Or 15? No, it hit 20, didn't it? Yeah, 23. It hit 23. It's hard to remember when you do reverse splits and stuff, but we hit 23, folks, after the reverse split, or just before the reverse split. He does the reverse split. We crater 70% when he didn't even need to do it, right? And the whole reason was to be over $5 so institutions could buy. That makes no sense. It's bullshit. VFF got a big institutional buy at $2. Doesn't make any sense. So we crash 70% after he announces the reverse split. The reverse split gets enacted. We get the executive order in December, but then it was like 4 or 5 months before we can get any movement. We still don't have full-blown rescheduling yet. And then it drops another 75% from there. And then from the recent high, that's 83% drop. So you could have just not did the reverse split, and you had great earnings in October, right here in October, and the day after earnings, this one here, where they had positive net income for the first time in history, I believe. So they turned a profit. First ever EPS, positive EPS. They announced dilution right after that. And then they argue with me and saying they didn't do it. And I was like, yes, you did. It was like 50 million or something. It wasn't a huge amount of money, but you still did it. And they're like, oh, yeah, you're right. I'm like, I know I'm right. Like, the fact that you're the CEO and you don't know that and I do, problem. Very big problem. And then, yeah, dilution rate after that. So that was mostly why this, like, again, they shot themselves in the foot how many times? They also bought Bitcoin at all-time highs here. So you buy Bitcoin at all-time highs, it crashes over 50%. You have first ever profitable quarter with positive EPS, and the day after you announce dilution. Like, if that's not shooting yourself in the dick, I don't know what is. And then you do the reverse split on the way down the day before Thanksgiving. And then we get the pop from the executive order, and then months of nothing. Classic U.S. government, right? And still not here yet. So my point is why would you do the reverse split? Why would you dilute right after great earnings? Why would you buy Bitcoin at all-time highs? Why would you announce a reverse split when you didn't have to? This could have been way different. Like, if they didn't do the reverse or the dilution and then the Bitcoin at all-time highs and the reverse split, this might have looked like this, because keep in mind, this move up right here was before the dilution and the great earnings. So maybe it came down a little bit with the sector because it took a little while and we didn't get any news, but maybe we would have just stopped there. And then maybe we would have kept going because of the executive order. And then maybe it would have came down because nothing happened for many months and we would have just been here, and then we could have been bouncing around here at like $20 still, right? Which would have been $2 because it would have been post-split. And then let's say, okay, we come all the way down here and we're back to $1 again and we get a warning. Well, okay, that's fine. We still have over a year because you have the 6 month plus the extension and the 30 days below. So you have over a year. We would be here now, potentially at, under $1. And then we could have did the reverse split if we needed to. But in a couple months, we might even see rescheduling full blown like enactment, right? So, this could have all been fixed and avoided, I guess is the word I'm trying to say. But, it's hard to tell how much momentum we would have lost, but how much momentum would we have still had here if they didn't do dilution, didn't do Bitcoin at all-time high, didn't do reverse split? We might have just stopped here at the EMA 12, and then once we got the executive order, who knows, maybe we would have went to 30 or 40, right, which would be $3 or $4. And then we would have almost been at $5 organically. But instead, they reverse split it and shot them. It's like they shoot themselves in the dick here, they shot themselves in the dick here with the Bitcoin, and then they shoot themselves in the dick here right before Thanksgiving and the reverse split. And then after the reverse split, to say you're doing it to be above $5 and to get the share count down to a reasonable level, then you announce dilution. 180 million ATM after, on my interview with them, never done a new ATM. I don't know what everybody's talking about. It's the same ATM. There's no new ATM. Boom, 180 million dilution. Like, you literally can't make this stuff up. And listen to how criminal that is. Jefferies upgraded the stock on Tilray after the split to $24. Well, funny because it hit 23 and then pulls back, and then they upgrade it to 24, and then a week later they announced the Life acquisition and the dilution of 180 million ATM at the market offering, which is dilution. A week later, after the Jefferies upgrade, and guess who's managing the ATM? Jefferies. You can't make this shit up, folks. It runs deep. This must be an elitist vehicle. I've never seen this. I've never seen this happen where it wasn't being pumped by the elites. And you have to think back to the Founders Fund, right? Peter Thiel invested in Tilray and everything in the beginning. So it has all the signs of an elitist machine and vehicle. It's just what usually happens is they dilute the ever-loving hell out of shareholders. They keep the price down for so long, for as low as possible, for as long as possible. They weed out all of the retail investors, no pun intended. And then finally, after 10 years of dilution, they finally let it run. It's like the Tesla thing, right? It's and people are going to be like, oh, he's comparing this to Tesla. I'm like, well, Tesla almost went bankrupt. Amazon almost went bankrupt. Apple almost went bankrupt. And guess what? Yesterday, Apple passed NVIDIA as the world's most valuable company. The only reason why Apple's still around is because Microsoft invested $150 million into Apple in 1997 to save them. And now they're worth more than Microsoft. So if Apple almost went bankrupt selling legal products, what does that say about MJ? Well, if Tilray hasn't gone bankrupt yet, I don't think it's going to. So again, it's just a way to screw over retail again and again and again. That's the only thing that makes sense. And I said this in the past, yes, there's some, call it negativity, call it whatever you want, but I don't think it's negativity. I think it's called realism. We're just not putting our bull blinders on, and these people need to be held accountable. If you're just as bad as they are, if you start defending the CEO and saying they're all that and a bag of potato chips, no. Have they done some good things? Yes. Okay, yes, we can say that the company, they turned a profit in October, but then dilution right after. But I would argue they could have been profitable many years ago, like a year or two ago, if, like before that I meant. And, it's just, you have to hold them accountable for all of this stuff, or like I said, you're just as bad as they are. But flipping it around now, Tilray did post positive EPS back in October of 2025 last year. So, and they have no net debt. Like I said, in the press release, it says here they have 0.7 million net debt. So basically, if they used all their cash and their liquid assets, they would have enough to pay down their debt, and they basically have none left. They just have a little bit left, right? Not very much at all. 700,000. Okay, so my point is if you're in the chat right now and you're listening. And believe me, I want a new CEO just like anybody else, probably more than the average person, or probably more than anybody else, because I interviewed him and I put my brand on the line, I put my name on the line, and he came in and he just turned us all into absolute chumps, right? Like, and I was never more pissed off in my entire life that they did that. And then I even had a call with them after I was pissed off, and I told them my concerns, and all my concerns came true. Every single one. I was like, we don't even have a rescheduling yet. What do you do in a reverse split? There's no need. We don't even have a warning anymore. We just regain compliance. Like, literally the dumbest shit. And I've emailed them I don't know how many times saying, hey, like, I've got this product improvement and this and this, and who do I talk to? Like, there's so many things that I could help improve the company, and they don't want to listen to me now. So, and then they asked me if I wanted to do an interview again after the whole thing blew up. It's probably because everybody inundated them with emails telling them to fire the CEO. But anyways, I was like, I'm still not really very happy. I still think we should get a new CEO. But yeah, okay, I'll do another interview, but it has to be a live stream. I'll do an interview with anybody at Tilray in a live stream format. And I got crickets after that. Haven't spoken to them. So I really don't care at this point. I have no interest in interviewing this management because I've already done it twice and they completely lied right to our fucking face. So, no, actions speak way louder than words. I'm done with you. You're all dead to me as far as I'm concerned. I think Blair McNeil would be a great CEO, the President of Canada. But as far as the current CEO goes, no interest at all. Like, wish you well, don't wish any harm against you, except maybe I wish you got 0 shares and you got fired. I wish there was a way to fire him and him get 0 compensation. I'd be all for that, 1,000%. But when it comes to, don't go out and send them nasty emails and like, oh, like, screw you and pig, and like I see that all the time in my comment. That's just not going to do anybody good, right? Like, anyway, don't wish any harm on him physically, financially. I wish he would lose everything and then some. I wish he'd go bankrupt and then some, because he completely fucked us over. Like, just lying through his teeth right to my face. And then I told him my concerns, and the exact damn thing happened, right? And anyway, so I've already said that. I made my peace with it. Okay. So I'm done interviewing Tilray. I'm not going to interview them anymore. I don't even really like interviewing any of these companies, to be honest with you, because they all have to, like, check their lawyers. And then one company I interviewed, they got back to me like a week later after I published a video. We got to take that down. I'm like, what? How much hours did I spend, right? It's just, they don't give a shit about anybody but themselves. They don't care. They don't think I'm a human being, that I have time. It's like, you never thought, like, there was a partnership with a company, and it was Avicana, and they partnership with Philip Morris, and the whole, like, interview was on Philip Morris partnership. And then he comes back and says, yeah, Philip Morris wasn't all about that. We got to take it down. I'm like, you never thought to ask them first? So I'll never interview them ever again, right? Like, big middle finger to you. Like, no interest. You don't care about my time, you're not getting a single airtime ever on my channel ever again. And I'm almost completely done with it. Like, you don't know how much how much effort and time goes into preparing for those interviews. And yeah, it's just very little reward. It's friggin' awesome during it and after, but man, what an absolute racket. And then, they got to consult their legal team, and I got to edit the video into oblivion. And it's like, that's not what it's like. You should know what you can and cannot say. And the whole point of my channel is being truthful and honest and real, and, calling a spade. And when I have to edit shit out, I hate that. You're coming on my channel, you play by my fucking rules as far as I'm concerned. You don't like it, get the hell out. Like, I'm done with it. And, some of these crypto companies, I'll interview some of those, and I've been interviewing some of these other companies, but a lot of them, I don't enjoy interviews. I guess is what I'm trying to say. But I really hate interviewing cannabis companies because, oh my God, I've never seen such a gong show in my entire life. But like, some are great. Like Cannara Biotech, I've interviewed them, I don't know how many times, and never ever can I see the questions in advance? Nope. Do you need to review it? Nope. Post it right away. You want to do a live stream? Sure, no problem. I'm like, yes, this is what I like, right? Like actual people with a brain and common sense, and they know what they're talking about. They know what they can and cannot say. Anyway, moving on. So what I was going to say was, and I said this in the Power Group private community the other day, is if you like Tilray now, well, you should like it now. Well, what do you mean? The price is at $4. It just crashed 83%, you said. Well, the thing is they have no net debt, and they just hit positive EPS for the first time in October. So if you liked Tilray 3 years ago or 5 years ago, they had all kinds of debt, and they were nowhere near profitable. So what made you like Tilray 5 years ago? Right? You should like it even more now. The only reason why people don't like it now is because the share price is way lower than it was 3 or 5 years ago, right? So is a share price indicative of a company's value? No, it's not. It does not. Like, look at Tesla, look at Amazon. Amazon dropped 95% in the dot-com days. That if you would have just been looking at price as a value metric, you'd have been completely screwed over, right? But this happens to every single industry. It happens to everyone, folks. Every new industry. And even more so in this one because it's illegal at the federal level in the US. So you think there's going to be less shenanigans and manipulation or more? But my point is if you like Tilray back here at, post-split 16 or 20 or 40, well, you should like it more now, right? They have no net debt pretty much. And they just barely turned a profit for the first time late last year. So again, from a pure fundamental standpoint, like I said, you should like it more now than 3 or 5 years ago. So that's all I have to say about that. But a little bit of a tangent there. Yeah, but as soon as he said I'm disappointed with how my stock performed, I was like, oh my God, this vein on my forehead just exploded. Like, you wanted it. You had to have. There's no other explanation. He could have announced a share buyback. No, like I said, instead they bought Bitcoin at all-time high, but they didn't want to buy their own stock at all-time low. That tells you everything you need to know right there. But the second they do announce a buyback or an NCIB, maybe that's the bottom. Should have been shorting. CEO's a liar. Probably be gentle as doves. Cut it. Serpents, yeah. It's not an MJ company anymore. It's a beer and logistics company with a side hustle in MJ. Positive plus, the report is good. Yeah, I mean, there were some good parts to it, like international. There was a great revenue beat, but margins were still not great, and they had a pretty big loss and miss in terms of EPS. So it's going to be outweighed. And I mean, all you need to do is look at the share price. It's at 414 here after hours. So that tells you all that you need to know is it's basically an okay report, right? Great at revenue beat, but huge miss on EPS. Therefore, price is basically flat, right? It's up a little bit, but not much. If it was a really great report, this would be at like $5 or like $4.75. We'll see what happens tomorrow, but keep in mind we do have FOMC rate decision into tomorrow. Citadel Securities said they're going to raise rates, which would absolutely tank the market like you wouldn't believe, but I don't think that's the most likely scenario. I think they'll pause it. But yeah, we still have a daily, and we hit the daily bear flag on Tilray that I mentioned, 386, and now we have a weekly bear flag, which is the yellow line here, targeting 350 in the all-time low. So again, you did a reverse split when you didn't have to. We're now back to the all-time low, and you're back under $5. It was all for nothing, essentially. Now you might have to do another one. What if we don't get rescheduling, and this push, and then the S&P 500 enters a bear market? You see what I mean? Like, like they just didn't think. And he even said to me on the call when I was talking to them after the reverse split, and I chewed them out, and they were like, "Oh, let's please talk." Like, well, I hope that doesn't happen. I'm telling them you're going to get shorted right back under $5 again easily. I said it's going to happen. I said I'm like 99% sure. We don't even have the executive order yet. And we don't even have rescheduling even close. And sure enough, here we are back under, we hit 380 2 days ago. And you know what his response was? Well, I hope we don't go back under 5. Or I think he even said 10. And I was like, no, you're going under 5 again. And he's like, no, I hope not. Does that sound like a leader to you? Does a leader act on hope? Or do they just get shit done? I just get shit done. You know? I don't try, I just do. I don't hope. I plan for the scenarios. I look at what I think my thesis is, but then I look at the bear side, the bull side. I look at all avenues. I look at the good, the bad, and somewhere in the middle. Right? When it comes to a chart, it can go in 3 directions: up, down, or sideways. So I prepare for up, down, or sideways. Then I have my overall thesis on what I think is going to happen, but I'm not acting on hope. So, yeah, the fact that he said that he's disappointed in the stock performance, bullshit. That is a lie. You either wanted it to happen, or you're just too goddamn dumb to even put 2 and 2 together equals 4, I guess. I don't know. It doesn't make any sense to me. But when he said that, it absolutely pissed me right off. Deserves to be absolutely fired, and every share. What we should do is start some sort of petition to take his shares away and give them back to shareholders. Like, everybody gets a piece of his. Well, he doesn't even own that many shares anyway, so we might each get like 1 share. Jesus. Oh, I didn't forget, Jam, about the Jeffries upgrade. And guess what? Ex-CFTC chairman is now a board member of Jeffries. It runs deep, folks. It runs very deep. But guess what? Generally, when the elitists have all their tentacles all over these vehicles and these financial assets, whether it be crypto, stocks, whether it be MJ, electric vehicle, tech, AI, when the elites back something, you'll be glad you stayed the course, right? And that's what I think we're in here now, is it's Tilray was chosen. I mean, Peter Thiel, Founders Fund, like that, they were the first one of the first investors in like Twitter and Facebook and Tesla, like, you know what I mean? So like, what is it? Peter Thiel, I think he started his Roth IRA with $10,000. It's worth like over $2 billion or something now. And Peter Thiel was one of the original, I guess, investors, you could say, through Founders Fund in Tilray. And remember, like, Tilray just came out of nowhere, and all of a sudden they're number 4 craft brewer in the U.S. in 22 countries. And like, does that sound just like a regular startup to you, or does that sound like some chosen one by the elitists? Right? It's probably chosen. Positivity, please. Well, like I said, there's not really that much. The board is guilty and compromises Irwin. Well, Irwin's the chair of the board, so they all just, he probably says jump and they say how high, as far as I'm concerned. Earnings suck, Leo. Record revs, non-organic, don't cut it. Yes, Simon owns the board of directors. Ain't much of a dick lift. Wait, Irwin. Where is it going tomorrow? Elevator down. Me too, I want to know. Who on the board is connected to Jeffries? Yeah, I wonder. Well, tomorrow, you know, we still have this weekly bear flag target of 350, and we're nowhere near, like, we're still in a daily downtrend. We'll be in a daily downtrend. If we get over 459, then we're no longer in a daily downtrend. We're not even close to, and then we need to confirm a weekly uptrend and negate the weekly bear flag. So we're at least 2 or 3 weeks away from negating the bear flag on the weekly. So that means 2 to 3 weeks at least, and that's just minimum. We're probably even longer than that. So don't expect too much to happen. I mean, obviously, any kind of random news piece that comes out that could end up being bullish would be, but that's not showing. You can't see that in the chart right now, obviously, right? Can't predict news. No one has a crystal ball, but who knows? Maybe they end up doing some news and it's dilution, and then it's even the opposite, right? It's news, but it's bad news, right? Or at least initially. The stock is up 10 cents. Yeah, exactly. It's up 11 cents at the moment, but you know, that's basically nothing. And it's after hours. There's low volume, so you know, we'd probably be flat if it wasn't after hours or close to flat. And Gates had to defuse the monopoly suit from the DOJ. Yeah, I think the Diamond Hands will reap the rewards eventually, despite all the mishaps by the board. Yeah, absolutely, because it's an elitist company, right? It's ran by the elites. It's the chosen one, and they're trying to screw us all over and get as many shares for as low as possible for as long as possible. That's the only thing that makes sense. I'm 100% sure confident of that, because there's nothing else that makes sense. Us Diamond Hands, good news. They should have listened to you. What you were telling them makes perfect sense. Yeah. But you know what he said back? Well, I hope not. Well, I'm telling you. Not only am I telling you, I'm also willing to help you think of ideas how to prevent that and avoid it. So not only am I telling you my concerns, here's some solutions to my concerns. No, we're just going to hope instead. Great. Awesome. And look what hope got them. Look where hope got them. Right the fuck back down where I said it was going to go. And this was before all the chart patterns were showing that $5.12 descending triangle target. This is before the daily bear flag target of 386 and the weekly bear flag of 350. This was just me using my brain and common sense that they're doing a reverse split. You just did dilution. You just did a reverse split. We still have no executive order or rescheduling at all. Like a monkey. I could have talked to a monkey and it would have made more sense to him. Right? And anyways, and I wish I would have been wrong. Like, I was hoping I was wrong. I was like, damn it, I don't want to be right. Right? Because I own the stock. And I know a lot of my followers are very much invested in the stock as well. Right? So I wanted to be wrong. But again, I don't operate on hope or what I think is going to happen or what I want to happen. I'm a realist. Regardless if I own the stock or not, I'm going to think as if I'm a Wall Street crook, right? That's first and foremost. That's always how I think of when I look at the markets. I'm like, okay, well, what would a Wall Street crook do? If I was JP Morgan, Goldman Sachs, Morgan Stanley, all these, what would I do? Well, I would fuck retail as much as I can, right? So that's always my first lens. And then my second lens is, okay, let's look at the technicals, because I'm more of a technical guy. And then I look at the fundamentals of the sector and the economy and the macro, what's going on, right? Like, what happens if the S&P 500 were to see a meaningful dip? And we're at all-time lows. At least if you didn't do the reverse split before, when you didn't have to, if the S&P 500, if we didn't get rescheduling until Q3, Q4, and the S&P 500 sees a blow off top and enters a bear market leading into 2027, well, at least we could have done a reverse split then, and they could have authorized a 20 for 1 instead of a 10 for 1, and then they could have just did one and then been done with it. But only if you absolutely have to. And here we go. We're back under $5. It was all for nothing. And we still don't even have any rescheduling at anywhere in sight. So we have Schedule 3 for medical. But again, I wasn't saying to them like, hey, I'm telling you this because I want to be right and I'm a know-it-all and I think I know everything and blah, 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 I'm gloating. It's like, no, I was like genuinely concerned as an owner of the company, as a shareholder, as somebody who's interviewed the CEO and the company twice on my channel. I'm your biggest cheerleader. I wanted to be wrong. I wanted to cheer for you, but I can't. I have an actual fucking conscience and a moral compass. And my first priority is every one of you, my fellow retail investors, because no one gives a shit about any of us. In fact, the whole game is so that we lose. That's what they are designed to do. They want us to lose. It's us versus them. 100%. Look at Clown Cramer, Jim Cramer. He said, Intel's the one. He's news for the masses, not for the classes. The classes are the hedge funds, the institutions, and the Wall Street banks. The masses are us. So why do you think he says Intel's the one and then it crashes 41%? I was saying I'm shorting SNDK, SanDisk, at 2,300, and it was the most overbought stock on the monthly time frame in history. And that clown Jim Clown Cramer, comes out and says he endorses SNDK. Now look, it's down 55%. So it's always us versus them. And that's why I created this channel. Well, it was first and foremost is because it helps filter out all the noise, because there's so much noise out there. But then second of all, I wanted to help retail not get slaughtered like we always do. And I was getting slaughtered, and that's why I wanted to create it. It's because I had enough of this. And case in point, look at CGC. It already did a 10 for 1 reverse split like Tilray. And now it has authorization to do a second one. I bet you they're going to do it probably sometime next month. They're at 89 cents. There's still no, how long is it going to be for rescheduling? August 17th is the deadline for briefs in the ALJ. And then it's going to take them a while to read the briefs, and then probably a couple of weeks to issue a recommendation, and then the DEA has to sign off on it and give the final approval. So we're probably into October, November, just before the midterms, before we get enactment earliest, right? So CGC is back under $1. OGI, Organigram, did a 1-for-4 reverse split. Not a lot of people know that. And its stock is at 94. So, again, like, why would you do it when you didn't have to? You're back under $5 anyway. It was all for nothing. We could be at 40 cents, and we could be months before any rescheduling happens. And then let's say that bear flag target happens and we hit 350 or 35 cents again. Well, then after you get the warning and the extension and you still can't get above $1, then you do it. And then we could have avoided all of this and the ATM and all that crap, because it just cascades, right? It multiplies. When they diluted after the great October earnings, they bought Bitcoin at all-time high, and then Bitcoin crashed. Then they did the reverse split right before Thanksgiving. They did the dilution after the Life acquisition, on the day of the Life acquisition. Like, it's literally like they're taking a revolver to their ball sack, and just every time something good happens, boom, left nut gone. Oh, another great catalyst happened. Boom, let's go the right nut. Lost the left one. Like, next we'll go for the shaft, you know? It's like, do you have anything left? Do you have any genitalia down there? Like, Jesus. It's just absolute stupidity. But it can't be. There's nobody on planet Earth that dumb. There can't be. You have to read between the lines here, folks. It's got to be to screw us all over, because you have to think, MJ investors are the most passionate investors on the planet. You think crypto bros are passionate? People would die for MJ. Like, I bet you, the average MJ consumer would rather die than not consume it. You know what I mean? That's how much some of these people love the plant, right? And like, just so many, like, listen to some of these, like Nick Sosiak over at Canara Biotech. Go listen to some of the interviews I did with him. Like, that guy lives and breathes this shit. Like, he loves this industry. And, like, myself included, I'm huge. Like, I always say, the reason why I thought I was put on this earth was to spread the MJ gospel. But then I realized how corrupt and manipulated this market is. It's just, I can't wait to make my generational wealth from MJ and crypto and be the hell done with it, because, like, I'm not going to be, I'll just be doing day trading and swing trading. Like, I'm already doing that now. Like, I shorted SNDK at 2,300. Today it hit 1,100. Like, and I was saying it was going to 1,400 the other day, or the other week. I made a video saying it was going to 1,400. Look at this. Hit $2,348, or sorry, 2,354, then 2,348 double top, and today it hit 1,050. I shorted the shit out of that. And then I think Jatinder in the group made like a few $1,000s off that short. And he's the one that put us on that. So shout out to Jatinder on that. But then yesterday I said I was short in AMD. And look, from the high of the day yesterday to the low of the day today, this thing's down 16%. And no end in sight. It's probably going to 350. So that's what I'm going to be doing. After MJ's done and all the regulatory red tape bullshit's done, after all the crypto regulatory red tape bullshit's done, and we go into full-blown breakout and they unleash the shackles and the floodgates open for both MJ and crypto, I'm done investing, probably. Like, or at least, like, staying on top of it. I'll just be, like, buying, like, Robinhood, maybe Uber, PayPal for the long term, maybe a few other ones here and there, AI companies when they, SpaceX and things like that, when they all crash like crazy amounts. But it's just like, after MJ and after crypto, I want nothing to do with the U.S. government or any of these clown CEOs and companies at all. I don't even want to talk to them. I just want to, like, oh, stock's down 80% on PayPal. Okay, buying it for the long term. Like, I'm not even, and I'm gonna just be swing trading. Like, I can't wait to get these clowns out of here, because they're just all the devil as far as I'm concerned. They don't give a shit about any of us. We need it to be at $50. Well, you're not going to get there with the current management. As far as, like I said, they got no genitalia left. Where are they going to shoot themselves next? 120. What's that? Your break even? Like, That's only $12 technically because they did a 10-for-1 reverse split. So 120 seems crazy, but it's $12. We were just at 67 in February 2021 pre-split. New CEO, please. Yep. Corporate speak, jargon, bullshit, politics rule, F it. Yeah. A guy passionate as you would be great on the Tilray board. Well, thank you. I'm humble. I appreciate that. And I notice your name is Humble Lion, which is pretty funny and ironic. But no, I couldn't be in the same room as Erwin. No way in hell. I'd probably end up with like 0 knuckles left. Like, oh my God. I'd get like an assault charge day 1 and probably minute 1. Oh, I'd love to just wring him by his neck. I mean, I wouldn't actually hurt him, but I'm just using a figure of speech here. But I would love to just wring his neck, or maybe just pick him up by the ankles and shake every last Tilray share and dollar out of him. And bye. There has to be some companies that are good interviews. Yeah, so I just mentioned Canara. Their interviews are great. Oxley interviews are great. Just go to my channel. And this is the benefit of being a good human being and telling the truth and not being a douchebag. You know, you get to have me talking good about you forever, right? But if you're an idiot and you lie to my face and all of my viewers, I'm gonna friggin' call you out. I don't care if you're the president of the United States, the president of Canada, or whatever you call it, premier. I don't even give a shit. And then, yeah, like Elon Musk could come up to me tomorrow and like, you know, I don't give a shit about. Like I've seen what Elon's for sure a puppet, 100%. He might even be alien, created by the elites. Like, we don't know. So yeah, just go to playlists, click on interviews. Where the hell is it? Here it is. Man, I was fine. I was in a good move until I heard him say, I'm very disappointed in the share price, and I was like, okay. I'm pissed again. Jeez. Where are we at? Why isn't it showing the... What the hell is going on here? Why isn't it showing the list? I swear to God, they update YouTube like every day, and they have no business updating it. Like, how do I see all of the interviews? It used to show up on the side here. Okay. That's weird. So I guess you have to just like cycle through now. I'll have to look into that and figure out what the hell's going on. Stupid YouTube. They're like updating it every day now, and I'm like, it was fine before. What are you doing? I think they just get bored. They're like, oh, let's put this here and this here for just to keep them, just to fuck with them again. It's like, just get comfortable, and this is here now, and then and like it's not even a better update. It's like, it's worse. Anyways, I'll have to figure this out later. I don't know what the hell's going on. Oh, there we go. You have to hit a little, see? Like, this is why we can't have nice things. So yeah, Nick Sosiak, that was the very first interview I think I did with him. And you can see how Canara grown like over the last 4 years. That's another thing I love about these interviews too, is like you can see how the company's transformed and whatnot over the years, right? But yeah, I interviewed Hexo's CEO and CFO, Canara again. There was Oxley a little bit later, Morgan Fox, political director at Normal. I hated interviewing that guy, though, because he was like, oh, it's going to be like 5 or 10 years before rescheduling. It ain't happening anytime soon. I'm like, what? Like, you actually believe that? And then like a year later, we got rescheduling. I was like, yeah, this guy has no clue how finance works and how corrupt politicians work. Yeah, interview with CEO Nevis Brands. He was good. No issues there. Anthony Martinelli. That was a great interview. That guy deserves all the credit in the world. Was some of his sources wrong sometimes, yeah, but that's not really his fault. 3D Capital, they were always pretty good to interview. Abacana, never again. Did an interview on Philip Morris partnership a week later after it was live. He tells me to take it down. Philip Morris didn't like that. Pfft, float. Pissed me right off. Oxley, can't say enough good things about them. Martin Lucas, this guy just turned into the devil as far as I'm concerned, telling people SpaceX going to 100 and like that guy turned into, like, I was warned by a lot of people, but anyway, I always like to give people the benefit of the doubt. But yeah, actions clearly red flag bullshit meter going up there. Who else? Yeah, they got the Tilray interviews, garbage. Lied right to my face. Decibel CEO, love him. Benjamin Z, smart dude, passionate, understands the industry, and never asked me to send him the questions or anything like that. Just post her, get her done, no issues. This one was amazing. Interview with XRP and 3IQ. That guy really knew his shit, and he was awesome. AIML, that was a pretty good one. I can't say enough. Oxy's probably my favorite. Like, those interviews were awesome. I even interviewed the president and the CFO there as well, and the CEO multiple times. And there was a recent one here with CFO Nick Sosiak from Canara. They just had a partnership with Cureleaf. And this was a Bitcoin treasury company. I don't really love that. I think it's pretty stupid, to be honest with you. What else? XTAL. Yeah. Some of these are questionable. This HMR one was pretty cool. Kind of interesting, but yeah. Oxley's probably my number one. They're just... They know what they're doing. They got a ex-lawyer, the guy, Hugo Alves and Mike Lickford. They were both at the same Bennett Jones law firm. They helped regulate the industry when it was first starting, and they understand the industry inside and out. And they actually consume MJ, and they know what MJ is, right? You don't have a guy who drinks whiskey with his cereal every morning operating an MJ company, right? So imagine what you can do. And then Oxley, same thing with Canara. Canara, the CEO and the CFO are heavy MJ consumers. And look at how great they are. They have a partnership with Cureleaf now. They're working on EU GMP certification. They've got they're profitable. They've been profitable for a while. They only operate in Canada, similar to Oxley though. So it's not apples to apples. It's apples to oranges. But it's amazing, when you have a company and like they're in the grow rooms all the time. Yeah, like I said, I bet you our management's hanging out in bars and stuff most of the time, right? They're not in their ops. They're in their pubs and drinking free beer, getting fat, and whiskey and cornflakes kind of thing. Tilray was 20 billion market cap with the same CEO. It's not CEO. It's the market sentiment change to see valuation of Tilray similar to previous days. Could not disagree more. It was a really great earnings report. Looking forward. Audible sigh. This is why we can't have nice things. Okay, so here's a thought. Instead of saying it was a great earnings report, elaborate. What was great about the earnings report? Right? Just saying it was a great earnings report makes you kind of look dumb, as far as I'm concerned. Like, what was it that made it stand out? Was it the international growth? Was it the EBITDA? Was it the revenue? Was it something else? Was it the net debt? Like, there's so many things that I could rhyme off that were positive, but you didn't name a single one. So you kind of look like an idiot. Looking forward to FOMO and short covering and short squeeze. Like, again, you're just a pumper. Like, you're not bringing any substance here. So I don't even care. Like, I'm just... Not going to ban you, but I'm putting you in timeout. You got 24-hour timeout. Next stupid time comment, it'll be full-blown ban. That was right after the Freer merger, and Simon diluted outstanding shares to over 1 billion, buying assets like MedMen all the way out. Yeah, don't talk sense and logical data and reason, David, because that doesn't exist with that Aruna guy or gal. No point on talking real and common sense. Hopium, yeah, exactly. 1,000% lie. 10,000% lie. Oh, pizza's back. SNDL had a bad report. Tilray is better. This is a big surprise. That is a big surprise. SNDL, like, it wasn't that bad of a report. They missed in both earnings estimates for revenue and EPS, but it wasn't a huge miss. Like, let me just bring it up here real quick. And they just said challenges with the liquor segment. But, like, that's what I don't get. Like, people are so criticized. Like, and again, I'll be one to criticize Tilray too, but I just don't get the double standards. It's like people like, I hear people all the time say, SNDL is amazing. I love their retail business and their liquor business. But then they hate the fact that Tilray's in craft beer. It's like, well, they actually produce the beer and make their own beer. SNDL is just operating retail locations, selling a declining industry. Unless you think MJ is going to be available in a liquor store, maybe the beverages, that could be okay. But we might be a long way out for that. Maybe we're not. I don't know. But to say that you like SNDL and not Tilray because, and then criticize Tilray, that's just stupid. Tilray's a maker and they don't pay any excise tax, any tariffs as well. Why do you think Carlsberg partnered with them? It's like we could bring we could expand in the U.S., but then we're gonna be hit with these high tariffs. So it's probably easier to do a license deal with Tilray and let Tilray produce it and give them a little bit of a cut, right? It's probably less than what they would be paying in tariffs. But yeah, SNDL, forecast was negative 0.004. EPS came in negative 0.02. So not a huge miss there. We were forecasted negative 0.01, came in negative 0.43. Massive miss. And then their earnings revenue estimate was 166, came in 166.26, came in at 165.98. So not even a million off. So wasn't even really that bad. What's next for Tilray? I really hope a new CEO. Like I said, I bet you if we got a press release now or tomorrow or whenever, if they said Irwin Simon is resigning, I bet you the stock would pop 20%, instantly. Maybe more. I'd buy a boatload of shares. Sub $3 most likely. Yeah, so 350 is the target on the weekly bear flag. We hit the daily bear flag of 386, but still yet to hit the 350 weekly bear flag target. Why all-time lows? Things are getting better. That's always how it works. As soon as things start to turn a page, share prices crash 80, 90% plus, retail gets shaken out, and then, the real adoption comes and momentum, right? It's same thing happened with crypto. Same thing's happening with crypto right now. We have the Clarity Act. So MJ's going through its clarity moment, and so is crypto. But what is the new administration? Every second word out of their mouth: crypto, blockchain, AI. You think they're just going to drop everything and focus on MJ? MJ will be lucky to be $1 trillion market, okay? By 2030, 2035. The crypto industry is already 2 trillion plus, and it was at 4 or 5 trillion not too long ago. And it's going to 50 to 100 trillion. So that means the crypto market is 50 to 100x times bigger. No wonder it's the second word out of the new administration's mouth, right? Because it's 50 to 100 trillion dollar market. It's the asset class to swallow all asset classes. The SEC is meeting September 17th to have a discussion on 24/7, 365 stock trading. How do you think they're going to do that? With Tilray shares? No, they're going to use blockchain. They're going to use blockchain and distributed ledger technology. That's why it was created in the first place. And they're going to pay off the debt with crypto. I don't know how many times the new administration has said that. It won't be that difficult. The DTCC, which clears all these stocks, so all of these stocks that we talk about and we interact, they all go through the DTCC, the Depository Trust and Clearing Corporation. And they are working, they've already launched. It was the 15th of this month. They did a soft launch. They're doing the full launch in October, and everything's going to be tokenized. And they said they have more supply, they have more demand than supply. And in 2027, London Stock Exchange is going to be doing 24/7 round-the-clock trading to compete with crypto exchanges in these tokenized version of stocks, right? So it's coming, and you're not going to be able to use MJ stocks to tokenize the world, right? It's the only thing you can do it was with blockchain technology and these crypto projects, right? That's why they were created. It's not a coincidence that crypto came into the 2008 financial crisis, the year after. How convenient, right? It was created by the U.S. government to preserve the world reserve, the dollar's supremacy, to pay off the national debt. They knew that this was going to happen since the 70s, right? They removed us from the gold standard. We entered what's called fiat currency, which is backed by nothing. Every fiat currency in the history of the world has failed. The average fiat currency fails around 30 years after it is created. We're in like 50 or 60 years. So we're already double the average lifespan, but that would make sense because the US dollar is the global reserve currency. So it would stand a reason why it's taking longer for it to fail, but it is for fucking sure failing. Like the US dollar has lost 97% of its purchasing power, right? So it's not gonna, we're gonna hit hyperinflation. They're gonna roll the debt. They're gonna bring down interest rates so that they can refinance the debt. They're going to use crypto. They're going to seize all of these. They say it's all for criminals and terrorists and drug traffickers, cartel. No, it's traceable. It's all open source. They can find it, and they not only can they find it, they can take the money back. So they're gonna reel all the terrorists and the criminals in. They're going to use that seized money. They're already seizing it from Iran, right? And they're going to use that and then they're going to legalize it, and they're going to explode the industry, and then they're going to be sitting on all this crypto, which I believe they are Satoshi. They're sitting on the Satoshi wallet. They are Satoshi. They created it. And guess what? When Bitcoin goes to 1 million, boom, debt paid. Debt pretty much paid off. Or if XRP, which was created in the US, there's even talks that they're talking about giving the escrow from Ripple for XRP to the US government, just gifting it to them. And I think there's a real good chance that that happens. But again, none of this is possible with MJ. So you have to call a spade here. It's just, it is what it is. It's I'm a MJ passionate investor, and it's my number one passion in life. But at the end of the day, you have to look at AI and crypto are going to be the two biggest industries on the planet, right? AI is going to be probably bigger than everything, but like crypto, you're going to have AI using crypto for micropayments, right? Fraction of a penny. It can be settled in 2 to 3 seconds. Everybody thinks that like MasterCard and like credit card transactions are instant. They're not. They're not instant. They don't actually settle right away. So, yeah, anyway, went off on a little bit of a tangent there, but I always, like whenever we see so many people just adding an MJ, I'm like, MJ's been in a 5-year bear market. It's like since 2021, and crypto has been in a bull market since March 2020. So that's why I'm focused on crypto so much. But like I said, hopefully the blow off top in crypto's coming soon. Crypto's going to get its clarity, and then right after that, I think MJ is going to get its clarity. And it would stand to reason one's going to be 50 to 100 times bigger than the other. Why would they focus on MJ when MJ's 100 times smaller than the crypto total addressable market? It wouldn't make any sense, right? Plus, it's national security. The rest of the world, China, Russia, South Korea, Japan, they're all legalizing or providing regulations, for crypto. So it's national security at this point. All right, going in it there. Hope everybody enjoyed it. This is now almost 3 hours, which is pretty crazy. I've been standing all day. I have not sat down in like 4 weeks. I bought a stand-up desk and a treadmill, like a walking pad under my desk, and today I haven't sat down once. So I just did 3 hours full of all standing in the same spot. So I'm gonna go to the gym. I'm gonna have maybe I'll go pick up an XMG or something like that, and just pray for a new CEO. All right, enjoy the rest of your evening. Thanks again, everybody, for joining, and I really appreciate all the support. After 3 hours and hundreds of viewers, we only had 2 clowns join the chat. So I would consider that a win. So thank you very much for everybody for being a good human being, and just supporting me, and it goes both ways, right? I honestly can say that this community has by far the best participating retail investors out there. Like I used to see so many bots, but then I turned off I turned off automatic commenting. So now I go through and I approve every single comment, and now the bots don't like my channel because they know that it's not going to show up. And I do that. It takes a lot of work on my part, but I want to do that so that people aren't getting scammed, and you're not seeing somebody posing to be Rod, send me XRP and I'll send you 2 back, or pumping these friggin' meme coins and scams and whatnot. So yeah, all about providing the most value as possible. And it's just a one-man show here. I'm not like a lot of these other channels that have a whole production crew and research team and all. Like this is it. This is me. And I'm not here to be the next YouTube sensation. The world's got enough of that crap, and half of them don't have a clue of what they're talking about anyway. So I'm here to tell the truth, nothing but the truth and the whole truth. Solemnly swear. But I think everybody knows. It's been almost I think it's been almost a decade now since I started my channel. So Thank you, everybody. I really appreciate all the support, and I'll continue to keep it 100 with everybody. And you know, at the end of the day, the world doesn't need another YouTube friggin' pumper or creator and
doing the what does that end where they end the video and they take their hand and they put it over the camera and they're like, see you next time.
It's like, that's so dumb. Anyways, gotta have some fun with it, right? It's just numbers on the screen get a little boring after a while. All right, have a good night, everybody. Much love. We'll see you on the next one.